But he's talking about it.
Yeah. I still think it's interesting that's coming from him, though, because the New York Fed is the one that kind of uses, it's when the Federal Reserve needs to do QE or QT or intervene in the markets, whatever. It's done through the New York Fed, so he has access to this real-time data. And I feel like him bringing up the fact that a hike may be on the card says the markets can handle it, the data he's seeing can handle it. Because there isn't caution coming with that. He's just saying it's a possibility.
Okay, so we are waiting for these European equity markets then to open up in around 5 seconds' time. We are expecting geopolitics to the fore. A bit of a sell-off in stocks is the expectation. The Asia session down by 1.8% today. In particular, Japanese markets were under pressure through the Asian session. So we have a bit of weakness then at the start of trade. We'll see how long it lasts, I suppose. But US futures are also negative. E-minis down 0.5%. NASDAQ futures down 0.7%. As we watch the FTSE drop 0.3. The DAX dropped by 0.2. So modest risk off as we wait to get further lines out of either Israel or Iran here. And everything we've heard so far this morning out of Iran from various sources seems to be quite of a de-escalatory nature.
Clearly, you've already seen our response. It seems to be the line that appears to be coming through over the last few minutes, which is really interesting that Iran is making this point. There's been a lot of flagging of some of the moves that have been made here. Iran heavily flagged, heavily trailed the fact that it was going to be making a move. The Israelis appear to have done something similar, or at least those around them appear to have done something similar as well. So therefore, we get back to kind of what is going to move markets today.
Yeah.
Is it going to be what's happening with the Fed? Is it going to be what's happening with the stock market story? How do we price in Netflix this morning? In terms of the single stocks we're watching, Schneider's weak this morning, ASML continues its move lower. So chip stocks are down. So this kind of idea that maybe the chip sector was going to rescue markets, it's been a very negative risk-off kind of week this week for stocks globally. Chips have been at the center of this story. ASML's been at the center of this story. And more, ASML is down by 1% this morning. Schneider's down by 3%, and some big banks are giving some softness as well to this market too. So UBS is down, HSBC is down.
Yeah, thank goodness for L'Oreal then. That takes us in a different direction. We have consumer products and services gaining this morning. L'Oreal is part of that story, up by 4.7% this morning on the back of those numbers that pushed their listing in the US higher as well.
The consumer sector has been kind of on a tear this week, and you brought this up as well, that perhaps there's some sort of inflationary hedge play showing up in the market. You said that earlier this week with Unilever. To me, it's the commodity story that's catching my eye. When you look at what's actually weighing on the market from an index perspective, especially on the FTSE, you're seeing Shell lower, you're seeing Rio Tinto lower. If you see commodities broadly higher this morning on a macro basis, why is it not showing up in the stock market? I think that's where you're starting to see that risk-off move show up and dominate what you're seeing in the commodity space.
I think from a miner's point of view, you can understand. From an oil point of view, I think it's interesting that the stocks are not reacting in the way that oil has been reacting.
And in theory, it should, right? If the concern here is that perhaps Iranian supply or kind of stricter enforcement of the sanctions that have already been placed may be at play here from the States, then there's that immediately should mean some sort of kind of line in the sand or some sort of floor under oil prices, which we are seeing, by the way. 88 handle on Brent, not showing up in Shell, not showing up in BP and the like.
Yeah, that is interesting. BP fairly flat, Shell a little bit weaker this morning. In terms of other sectors then on the move, there aren't many in positive territory, but there are a few. Another day where utilities to the fore, so utilities stocks up by 0.2%. The worst performing sector today, though, is autos and auto parts. Interesting, we got that line out of Nissan earlier on today, a bit of a downgrade to their expectations about what they're going to do in the full year. And we do see some weakness across the European auto space this morning.
We also just need to widen the lens here a little bit and just think about the week that we've had. We've had a series of negative reversals during a number of days this week where the market opens and then kind of moves a little bit higher and then fades. Maybe today doesn't look like that. But the market is kind of, the stock 600 is now trading below 500, We're trading 496. It's quite a decent move to the downside. Remember, the high was hit on the 28th of last month, 512. We're now trading 496. So this week, the last kind of week and a bit, have seen some quite big reversals, and this week has seen some really quite big moves lower for European equities.
And there are still calls out there that we're going to hit 540. Remember Citi, Goldman upgrading on the, and they haven't changed their calls yet. So it feels like, at least, and remember we haven't heard from these players just yet, but it feels like the thought, at least on Wall Street and global Wall Street, is simply that this is a temporary dip.
Yep. Do we continue though? It's going to be interesting to see how the CTAs, some of the trend followers, if the momentum turns, do they turn, and how significant?
You know, I love an algo conversation, Guy.
It's Friday.
Let us just take stock of where we are then. European stocks are down. Stock 600 down by 0.7%. And the reason for this is geopolitical risk off as a result of developments overnight in the Middle East. So let's get the latest here. US officials say Israel has launched a strike on Iran less than a week after Tehran's rocket and drone attacks. Brent crude spiking on the news, jumping above $90 a barrel very briefly before pairing those gains. Let's get more with Jumana Besetcha, who joins us, Bloomberg's Middle East anchor based in Dubai. Jumana, bring us up to speed with the latest, because a few hours ago this all looked extremely risk off. Now it looks a little less so, especially when you take into account some of the recent lines coming through from Iran.
Yes, that's right. I mean, if you can think about it, over the course of this week, there's been a lot of speculation as to how Israel would look to retaliate to that unprecedented Iranian attack on Israel last weekend. And indeed, it looks like that retaliation has actually occurred overnight. The explosions happened in Isfahan, and it later emerged, and details are still fuzzy at this point, that the target of this airstrike were specifically military bases and air bases, which Isfahan is home to, and of course, were the launchpad of Iran's own missile attacks on Israel last week. So it looks as though the response so far has been limited and proportionate. Now, again, I do want to mention at this point that Israeli officials have so far not taken responsibility for this attack. But we did get a tweet just a short while ago from the National Security Minister, Ben Gvir. It's just a single word, the word weak. And again, what he's alluding to here is the split within the Netanyahu government at this point. And it seems like many members within the government would have liked to have seen a more hawkish response. And what that does tell you is, in this case, even though Israel have chosen to retaliate, perhaps they've done enough to show that they are retaliating to what Iran did last week, but are not looking to escalate beyond what we've seen. The ball, of course, is in the Iranian courts at this point. So far, again, no official commentary from Iranian officials, but we are getting lots of lines from Iranian state media looking to downplay what happened. Just to give you an idea, early on in the morning, they were saying that there are no reports of an attack from abroad on Iran's central city of Isfahan or any part of the country. Iran's own air defense units were activated. State media saying that 3 drones were actually shot down. One last thing that I do want to say is that it's important to put into what has happened in the last 24 hours in the context of Iran's foreign minister remarks yesterday at the Security Council, where he said that the Iran attack on Israel last week was legitimate defense, but he warned Israel about further adventurism. The question, guys, is whether what happened this morning would be deemed sufficient for the Iranians to go back with another retaliatory strike, and that is the big question for markets at this point. But I think what provided some relief to investors was the fact that those nuclear facilities were not targeted, a fact that was confirmed by the IAEA earlier this morning as well.
Jumana, thank you very much indeed. Jumana Besetcha joining us out of Dubai. G7 foreign ministers have just sat down for their conversation. The cameraman's just walked out of the room. We'll see what commentary we get from that meeting. Let's talk about how markets are reacting to all of this news, the confusion that we are seeing. I want to start with Joe here and figure out exactly what is happening. Joe, what are the defense stocks doing this morning?
Good place to start, because we are actually seeing some minor outperformance in these stocks. Bear in mind the broader market is down pretty significantly, so we are seeing these stocks outperforming. Only small moves, actually most of them in the red at the moment. Bear in mind they have had this huge rally recently, trading at 20 times earnings. There are concerns around valuation levels at this point. And on that note, we have actually got news of Deutsche Bank downgrading Rheinmetall, the big German supplier. I imagine this note was written before last night's news, but nonetheless showing you how investors are thinking about that. They note Rheinmetall has risen by 3 times since they upgraded to buy in November. Just an idea of how much these stocks have rallied. But the one in focus for sure today. There are actually bigger moves, though, in airlines, interestingly. We had that spike in the Brent crude price, about 4%. A lot of that has retraced, of course, overnight, but oil still higher, and that weighing on airlines this morning, seeing IAG, Air France, Ryanair, Lufthansa all lower. The other thing, not just the oil price, is about how it disrupts travel around the Middle East regions as well in terms of the geopolitical situation, but that is clearly weighing on the sector alongside the oil price today. Then we'll look at some earnings. We did do a few of them in the stocks to watch, one of which, L'Oreal. There we go, a decent gain for that one over in France. Their skincare and makeup sales are beating expectations everywhere apart from China. That continues to be a weight. And we mentioned EssilorLuxottica talking about sunglasses not selling as well in North America. Quite an interesting line from them. We're seeing that stock coming down further from a recent record high, up 2%, down 2% at the moment over in France. Final French one, Sodexo. This is the airport catering company. Strong sales out of them today. That one gaining 4%, but a massive move is Royal Unibrew over in Denmark, Copenhagen. They have the rights to sell Heineken over in Denmark. Heineken obviously is listed in Amsterdam, but they have the licenses for that. A 14% gain on a Friday. Everyone starting to think about the pub maybe. That one up 15% at the moment today. A couple of deals to bring you as well. We mentioned Geely offloading all that stock in Volvo trucks. So that one is lower as expected, down 4% today. It's more than $1 billion worth of shares. And Schneider Electric potentially doing that massive deal for a US-based rival. It's got a market cap of $17 billion. That is breaking news. It was reported out of Reuters. Potentially Schneider looking to do some big M&A, and that stock is coming down 2% over in France this morning. A couple of morning calls. They're both in banking. Barclays is getting a new buy rating over at Peel Hunt, who says the valuation is too low and the buyback outlook is exciting for them. That one gets a buy again. Down with the broader market, potentially a slight outperformance against some peers. 245 is what it's worth according to Peel. Trades at 182. And finally, Santander downgrades their Spanish rival BBVA. They are saying that the BBVA bank is seeing a decline in lending earnings over in Spain. They're cutting it to neutral. It's down 2% for BBVA over in Madrid.
All right, Joe Easton from our equities team, we thank you so much for walking us through some of those crucial morning moves this morning, for lack of a better term. Let's go from the micro to the macro. Joining us this morning, Skylar Montgomery-Koning, Director of Macro Strategy over at TS Lombard, joins us right here on set. A pleasure to have you on the program. Look, the highlight of this morning seems to be the geopolitical risk, and although it is getting pared back, you are seeing that stock market kind of being weighed down by the risk, even though you're seeing some of the other pieces of this market, FX, currencies, et cetera, pair some of the move. Is this simply a cash risk-off kind of play, and how long do you think it'll sustain?
I think, what we were seeing this year was a very strong equity rally, and that was losing some momentum. And so because we've had this bit of a wobble from the risk side, it's taken it to kind of get that exhaustion momentum. For the risk itself, I think the issue is with geopolitical risk, and especially this in particular, it's very hard to price. So what you tend to see from the market is they just ignore it after a while. And if it doesn't keep coming up, if you can't keep getting risk events on it, then it moves on, because the worst scenario of oil prices well above 100, that's very hard to find a middle ground of where you price it or kind of what percent you price it. So it just moves on largely.
What is then the focus for Europe in particular in terms of the kind of bull case for Europe, whether it's equities or whether it's kind of the bonds as well? Is it the rate cuts that may front run the Federal Reserve, or is it the catch-up trade coming out of the States? What has a bigger effect on European assets?
I think it's both things, right? We're getting more optimistic on global growth. We're definitely seeing a bottoming in Chinese data, and that's meant that there's been a broadening of the rally, and you've actually seen U.S. equities underperform or perform more in line with other markets. And equities in particular, what you've seen is that there's been that broadening in Europe, and European tech has done quite well as well. The other thing is the cuts. It's certainly that we've had stagnation this year. The ECB is tight, and so you need cuts this year to see a rebound in growth in Europe for 2025.
Let's talk about the scale of the cuts. Multi-central bank governors on the tape right now talking about 50 basis point cuts. How realistic is that? And I want to play some sound as well. This is Klaus Knott in DC talking about the ECB's relationship with the Fed.
Monetary policy always takes place in a global context, but at the same time, we're not the 13th federal district. We have our own monetary policy, we have our own set of outlooks, economic outlook, inflation outlook, And as Christine already alluded to, some of the fundamental drivers of inflation have developed quite differently in the US than in the euro area.
John Williams in the States, though, talking about the potential for hikes maybe coming through from the Fed. Not the base case, but he's talking about it again. Skylar, how far can that divergence go? How possible is it that we could see a 50 basis point cut from the ECB? The consensus is that the ECB cannot stray too far from the Fed. How far is too far?
I think it's warranted that we're seeing that divergence, and I'm surprised that we haven't had it priced more early in terms of we've seen economic divergence and it's not been reflected in the policy. And I think, yes, we've had a little bit of spread widening, we've had a little bit of that pricing in the 2024 STIR markets, but it's not enough in terms of if you look at the whole hiking.
What's enough? Talk me through what.
Yes.
If you were in charge of this, what would that spread look like? How big a divergence could we be heading? Do you think we should be heading for?
I think we need to be focusing on where the landing zone is. And so for the ECB, I think you could get at least 200 basis points over the next 2 years. And that's certainly not price. It's just chasing Fed pricing. Fed pricing is at around 120 to 150 for the whole cycle. And that looks more reasonable. But I think you need at least kind of 50 basis points more in Europe in the ECB cut pricing over the next 2 years.
And is that, we've been talking this morning about the interplay of geopolitics then and the stories around inflation and inflation expectations and what that means for rates. The rates picture looks confusing, but then across the Atlantic, pulling in two different directions, perhaps. But then you put that alongside geopolitics, which also pulls treasuries in a different direction, because you see this morning that it's, it's not the Williams lines about the possibility of Fed hikes, it's the geopolitical risk that sends people into treasuries. How do you approach the fixed income markets right now, Skylar, when you've got those pulls in opposite directions?
Yes, it's quite hard. I think, what we're seeing in terms of policy pricing, in terms of the neutral rate that the market's looking at, around 3.9%, the 10-year looks fairly priced. What you are worried about is the term premium, which is what you're talking about with the geopolitical situation. Term premium is very close to zero, and historically that's really, really compressed. It should be closer to 150 basis points. So if you have more economic uncertainty, if you have more geopolitical uncertainty, even if you just have the kind of increased supply that we've had more recently that's expected to continue, you'd expect higher yields on that term premium component.
And then that maybe pushes, all of this, if we see the inflation story back to the fore, that's been pushing the dollar higher. The Haven flow pushes the dollar higher as well. Does that become a problem that breaks somewhere, Skylar? And maybe doesn't break in the United States, but breaks for somebody, because we've been talking a lot on this program about how the strength in the dollar, yes, it's grown in the US, but it's problematic for the globe.
I mean, absolutely. There's this problem when you get a stronger dollar. It's not very good for risk sentiment. There's also a worry about inflationary pressures. I don't think we're quite there yet in terms of people are talking about euro-dollar depreciation and that inflationary impact bleeding into what the ECB decisions are. We aren't there yet in terms of we haven't had a big enough move, but certainly at some point it's a consideration.
But if we're talking about hikes, at least as maybe not the base case, but it's entering the conversation, should we be talking about parity as well?
I mean, certainly if we're talking about hikes, we definitely should be talking about parity. I think just on the divergence that I expect, which is, not as much as you'd get from a hike, you'd expect much more euro-dollar downside. I think to, Anna's point earlier as well, if you think about what are the hedges right now and to the risk that we have, the risk being higher interest rates and geopolitical tensions, the answer to both of those things is long dollar.
In terms of the transmission, I want to get your take on a question that we were talking about with Nation Sheets a little bit earlier on. Are the transmission mechanisms into the global economy going to change significantly from geopolitics? At the moment, it's oil. We get up in the morning, we saw a story like this. We look at the oil price. Are we looking the wrong way? Are we thinking about this the wrong way? Increasingly, is it going to be copper and how these stories kind of relate back into the global economy? I'm trying to understand that, because if you're going to build hedges, you want to be thinking about that. So maybe in the morning I don't kind of look at what's happening with oil. I look at the copper price. I look at the miners rather than the oil producers. Is that going to change over the next few years? And is the way we need to think about geopolitical reaction in the global economy going to change significantly?
I mean, I think certainly it means we're thinking about higher volatility, we're thinking about higher inflation. I think the other bit that's changed is the central bank reaction function, right? So historically, because of the equity bond correlation, you could find some reassurance in being in a 60-40, right? Your bonds wouldn't sell off in that kind of geopolitical situation. But if you have higher inflation and the central bank has to respond to that, then you also get fixed income selling off. And so people have to think about alternatives. They have to think about buying commodities, not only because it's a hedge against that situation, but because, when you get that risk off, it will increasingly be commodities that rally.
Skylar, what do you think the inflation conversation, with that in mind then, will look like when we get to the end of this year? It's difficult to say with the geopolitical tensions, I'm sure, but even aside from those, a lot of the direction of travel of late has been to think more about inflation and not less.
Absolutely. I totally understand the worries over stickier inflation, right? On the goods side, we have both shipping disruptions as well as the commodity bit. And then on the services side, you're seeing stickier wages. And so I understand that people are more worried about inflation. I think there's definitely a difference between the US and Europe in terms of the consumer being very strong in the US means that they're not pushing back against that possible commodity price increase feeding into prices on the headline. So you can have that margin expansion still there, or just the margins, not taking the full brunt of those commodity price increases. In Europe, consumers are pushing back more, and so margins will have to take that brunt. And so that's a little bit more concerning, but it means that you don't have as an inflationary effect if you get significantly higher commodity prices.
Skylar, thanks so much. Thanks for coming in this Friday. Skylar Montgomery-Koning, Director of Macro Strategy at TS Lombard. European equity markets under pressure, down by 0.6%. US futures still pointing lower, even if they are off earlier lows. E-minis down by 0.5%. We'll come back with more on market reactions to developments in the Middle East. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this. It has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
This is Bloomberg. Welcome back to the programme. 8:23 here in London this Friday morning. We have European equity markets moving lower this morning, down by 0.6% on the Stoxx 600. That is all geopolitics. Bucking the trend, L'Oreal in the consumer goods space up by 5%. So really bucking the trend this morning. It seems that this business bouncing back as Europe and North America offset some weakness in China is the overarching story. We saw it trade higher in the United States and lift some of its peers in the United States as these numbers came out. Let's get some analysis. Bring in Deborah Aitken from Bloomberg Intelligence, senior analyst for luxury goods and beauty. She's got a number of stories she can talk to us about this morning, so really interesting to get your perspective. The L'Oreal story then, talk us through it. What's been going on here with goods and beauty then, Deborah?
So I think into numbers, the sector overall was quite muted, low. We'd seen a couple of numbers from the US with Ulta, one of the retailers over there of beauty, just not perhaps having enough new product and innovative type brands in the store, and so it suffered a little bit. And some of the industry data wasn't very strong. So we ran a 4.5% growth at Q4 from L'Oreal. We saw the second half of 23 a bit slower for the sector overall, and for luxury goods too. So very strong 1 half, slower 2 half. And all of a sudden we run on 9% growth into 1Q. And that's after Beiersdorf, which owns Nivea in mass market, but also La Prairie at the high end, ran 7% plus in its 1Q. So it's kind of, well, actually, when we look at the numbers, Europe is double-digit, North America is double-digit, and high single-digit if we pull out one early order into Canada on IT. And emerging markets are up 16%. And then across that, you have 3 out of 4 sectors outperforming. So we're still awaiting Lux repair, and we're still awaiting China repair. So North Asia is still slightly negative.
Well, let's zoom in on that China piece of the equation, the softness there. walk us through what that means.
So we've been waiting for China to gradually improve. We saw at one point 2.5 years ago, half of the sales growth from the high end in the marketplace, a real trend down, and part of that from the Chinese consumer was because they were at home and not traveling. It really is big business to the beauty and the luxury goods industries. Yeah. And what we're seeing now, if we look at the latest numbers we have on the travel side, for China, they're staying at home and they're traveling. So, for example, just to switch over, but we are talking about L'Oreal Luxe and the luxury industry. If we think about 2019, we used to say the Chinese consumer globally accounted for 1/3 of the luxury goods market. Yep. And right now it's 23%. And they used to spend about 10% of 10 of that 33 in China. It's now 16%. So they're doing much more in China. But as a cohort, they're still not where they were, and that's the story.
Just very briefly, I've got about 45 seconds here. Unilever to delay its recyclability, that's a hard word to say, pledge by as much as 10 years. How significant is this? What does this do to its ESG credentials?
Yeah, and I think it's about, it still scores very well on ESG, but it needs to really focus in terms of its profitability on its biggest categories and businesses, and that's been the promise from new CEO Heinz Schumacher. And that's where we'll see it moving forward for the sake of the P&L.
Deborah, great to see you. Thank you very much indeed for stopping by to update us. Deborah Aitken joining us from Bloomberg Intelligence. Those stocks have really underperformed this year. Coming up, we'll get back to what is happening in the oil story. We'll update you on the reaction to the overnight news surrounding Iran. We'll do that next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisce with former and current players.
He's a day trader. He called himself self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
DOJ or other authorities
could face bigger challenges. Was elected.
Was going to keep reading the World Cup. This is a three
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
The reality of geopolitical challenges that we saw when we looked really carefully at the data is that markets tend to initially overreact. And I think it's precisely what we're alluding to here. That overreaction reflects that uncertainty premium when it first erupts. But typically, these events end up being less disruptive than we fear they might be.
City Nathan Sheets joining us a little bit earlier on, talking us through the geopolitical implications of what we've learned overnight, though what we've learned overnight keeps changing, certainly as we worked our way through this morning, in terms of the ferocity of the attack that maybe the Israelis delivered on Iran. We'll continue to keep you updated on that. Nathan was making some really interesting points about the idea that maybe actually as we go through the energy transition, oil becomes less of the transmission mechanism from geopolitics into the real economy. But that certainly is still the case right now, is still the transmission mechanism. So Brent rallying as much as 4.2% overnight. We've been through $90 a barrel. This obviously following the launch of this attack. Stephen Stepchinsky, I'm going to get that right one day, joins us now to discuss all of this. Stephen, good morning. Big initial reaction. We didn't know much at that point, kind of light overnight trading. Walk us through kind of where we are now, how the oil market is perceiving what we've seen overnight.
Okay, I think the oil market went from high levels of anxiety in my morning, which is your night, and now it seems much calmer as we have a better grasp of the situation. When oil prices were surging above $90 Brent, that was a situation where there was a bit of a fog of information. There were a lot of reports on Twitter and also from local media that were unverified that said that there were explosions in Iran and other places. It wasn't clear the situation, the severity of the attack, and who even did the attack. You know, the market had for a long time been watching for Israel's response to Iran's attack over the weekend. So the market was anxious and prices were surging quite high. But now, as more details come out, it does seem, according to Iranian spokespeople and their local media there, that there were some drones that were shot down, but they are saying that there isn't major damage to any significant damage to any of their infrastructure. And it does seem like Iran's government does appear to be downplaying the situation. Now, Bloomberg had confirmed with U.S. officials that Israel had prepared a strike, But again, while we do know what the situation is, well, we don't exactly know what the situation right now is. The market is significantly coming down. You know, we're at 88, or we're below 88 now, dollars for Brent oil. So I think there is a bit of a calm. Still, people are jumping. No matter what comes out, if there are more details that come out, it could change that over the next few hours.
Stephen, talk to us about this kind of geopolitical premium that so many people are calling for here. It feels like now there's, to your point, a lack of clarity on this kind of tit for tat between Israel and Iran. The focus is largely showing up on the Strait of Hormuz, potential enforcement of sanctions as well. What is kind of the bull case for oil prices here? What is the high end of the range that you're hearing?
Yeah, I mean, certainly if there is a worst case scenario for oil, that would be the closure of the Strait of Hormuz. Now, to be 100% clear, it isn't likely that that's going to happen at this case. And also, we earlier on the show had FGE Chairman Feshraki, he's an oil expert. He was also downplaying the idea that the Strait of Hormuz could even be shut for very long. He said that if it happened, Iran would do it as more of a symbolic move. That would be days, maybe a week tops. And of course, that any closure there would affect Iran's economy just as much as it would affect the rest of the region. But if that does happen, we would see spikes in oil. Some analysts and traders suggest that if there is a closure, the market would react, perhaps even overreact, and you would see Brent above $100. If it's extended outage, if it does seem like that this starts to really halt trade, because the Strait of Hormuz is for 30% of oil trade and 20% of liquefied natural gas, you could see oil jumping quite significantly. But for natural gas, you could see gas, LNG prices rise almost tenfold from where we are today, according to Rystad Energy. And that would be an all-time high. LNG would rise higher than where it was in 2022 in the wake of Russia's invasion of Ukraine, which upended the gas market. So the Strait of Hormuz is key, but that is absolutely just a tail risk. It is not something that the market is pricing in at this moment.
And so we're working through a lot of questions around the geopolitics, Stephen, and exactly what happened. As you point out, Iran does seem to be downplaying the relevance, and so therefore the market maybe gets a chance to focus later in the day, European time, on other things. And where will that take us? Because midweek, we saw a big drop in oil prices as a result of maybe Chinese data, the US stockpiles data. What's the demand story like right now, Stephen?
You know, the demand story is also a bit hazy. I think if you had talked to me at the end of last year, there was a general view in the market that demand was going to be quite weak. And we are seeing some weak data points right now, but overall, oil demand has been, I think, stronger than what some people have expected. I think there's also a lot of focus on supply. Of course, OPEC Plus has their supply cuts through the end of the second quarter. And again, FGE Chairman Feshraki said that is basically 6 million barrels per day of oil that's just untapped that could quickly come in. So there isn't really a shortage of oil, but there is certainly a deficit because of what OPEC Plus is doing as well. You could see that shale production has been pretty resilient. So all those things could sort of offset each other, but we are in a bit of a deficit, and the fundamentals are backing up this kind of high $80 level. Goldman had a note earlier saying that $90 is probably really the highest that will go before we start seeing quite a resurgence in shale production, therefore bringing prices down more. So this $80 range is probably where we're going to play for a little while until OPEC Plus starts to add more barrels to the market, if they do decide to do so after June.
Stephen, how marginal are Iranian barrels? How important are they in terms of price setting?
So it's a couple million barrels a day, about 3 million, 4 million barrels a day of oil. Now, that again is not a huge amount, but it is something that if there were a stricter regime from the United States on Iranian oil, if there were stricter measures against Iran, then certainly you would see a price reaction because barrels would leave the market. But again, quoting FGE Chairman Feshraki, who knows this market very well, he said if all of Iranian oil were to leave the market in one day, Saudi Arabia could meet that supply. So it wouldn't lead to any shortages. So again, that's something to remember. Even if there are significant disruption in Iranian exports, there is a supplier right next door, right nearby, that could fill that gap.
But then there's the U.S. sanctions story as well. When we're talking about the disruption, there's already U.S. sanctions placed on Iran, but the enforcement seems to be a question. Eurasia Group, for example, saying that a loss of 500,000 barrels per day of shipments just off that extra enforcement could result in an increase of $2 to $3 a barrel. Is that consensus, Stephen? What does the sanctions impact have, especially when we get that voting, that bill out of Congress tomorrow? What does that impact have on the oil story?
Well, first off, just because Congress votes on something doesn't mean it will become law the next day. There is still a process. But that all being said, if there is stricter rules against Iran, yes, there will be a market reaction. The market reacts to a lot of things. But in terms of an actual supply deficit, if you're worried about people getting their oil, there might be a bit of a period where there is a tighter market and there is more of a deficit. But OPEC Plus, Saudi Arabia could decide to fill that gap. And that is something that is left to them in the decision-making in Riyadh and with their allies. So there is a consensus that any stricter measures against Iran, if the U.S. were to have stricter, they were actually enforcing the rules that are in place, and it is harder for oil importers to get Iranian crude, then yes, there will be likely a price reaction. But it could be, according to the traders and some analysts, relatively short-lived if that gap, again, is filled by other OPEC members. So I think it is reminded that while there could be oil barrels that leave the market, it doesn't necessarily mean that we're suddenly in a shortage that results in canceled shipments or people not being able to get the oil that they need.
Bloomberg Stephen Stepchinsky walking us through the various scenarios of what might happen with the oil price off the geopolitical developments overnight. We thank you so much. Coming up, we stick with the commodity space, depending on how you view it. Bitcoin paring losses after falling on the geopolitical tension in the Middle East, now officially in the green. We're going to get the view from Kathleen Breitman, co-founder of the Tezos blockchain, next, ahead of the highly anticipated halving. This is Bloomberg.
Ask you about politics. You've been involved advising presidential candidates, I presume presidents as well. You ever have any interest in serving in a senior position in the federal government or running for office?
Absolutely, unequivocally, no.
The aggravation factor isn't worth it?
It's the aggravation factor, but it's more importantly is I don't believe there's any integrity in it.
So you do give money to politicians, though, because that's the system, but you...
It's part of the game. I think, to be honest, I think there's a need for a multi-party system in the U.S. to give more people a choice about where they can throw their voter support and their political support, but also to cause the country to sort of come together by having everybody have a role in deciding what is in the long-term best interest of the country. I've often believed that Black Americans as a people and as a voting bloc should adopt the same position that the original founders of the Congressional Black Caucus had in early 1970. Their philosophy was enunciated like this: Black Americans should have no permanent friends, no permanent enemies, just permanent interests.
Olympics, sporting World Cups, leap years, and Bitcoin halving. They each happen every 4 years, and in the crypto world, halvings typically meant a boon for prices. In a nutshell, Bitcoin halving means fewer new tokens are issued. That's because Bitcoin miners, who validate blockchain transactions, receive 50% less of a reward for doing so. At Bitcoin's launch in 2009, miners received 50 new coins per block. Post the halving in 2024, that'll be cut to just 3.125 Bitcoin instead. In the past, we've seen prices spike following the event. For example, in 2012, when the token jumped by 8,000% in the following 12 months. This time around, the prospect for further gains is unclear. Some analysts say the halving could trigger upside of at least 80%. Others argue the event is already baked in, particularly as Bitcoin's already risen to fresh records this year, which brings to mind a familiar phrase: past performance does not guarantee future results.
And it's been a bumpy ride over the last 24 hours. The Bitcoin halving is here. We've been anticipating it, as we've just been hearing, for quite some time. But we've had geopolitical tension overnight, which initially sent actually Bitcoin lower. It's now popped a little higher. It's interesting to see how gold and Bitcoin are reacting, maybe in different ways, being used as different things. JP Morgan, Deutsche Bank strategists saying that today's once every 4-year halving, as we've just been hearing, largely priced in. So we've already moved on from that and maybe are now pricing in actually some of the geopolitical tension. Kathleen Brightman, co-founder of Tezos Blockchain, joins us now on set. Let's come back to the halving in just a moment. There's lots of interesting questions around that. But the action overnight speaks to maybe how people continue to perceive Bitcoin, and it's not as digital gold, it's as a sort of technology asset, more akin to how we maybe perceive the NASDAQ, i.e. when we go risk off, Bitcoin falls. What does that tell us about the journey that Bitcoin has gone on and how far it's come to becoming that kind of store of value asset that maybe gold is, or maybe it hasn't?
I mean, it's still an extraordinarily risky asset.
Yep.
I think the goal is for it to become some sort of digital gold, but at the end of the day, it's a 10-year-old piece of software, and it's still got a ways to go to prove itself as one of those havens. We saw something very similar in the price of Bitcoin dropping at the beginning of COVID, in like March 2020, when things, I think, hit people with reality. The first thing they tended to sell off was their pretend internet money. So this is a pretty predictable reaction to something that I think has probably spooked a lot of people in the world.
Pretend internet money.
Yes.
A lot of people are going to be kind of quite annoyed by that statement. They're going to say that this is something that actually has made the transition to becoming something more useful. You're not convinced?
Oh, I think it's good to be self-effacing when you're dealing with an experimental technology. And at the end of the day, Bitcoin is born out of a hobbyist exercise on a mailing list. So it's good to stay humble.
Okay.
It's good to stay humble. We will get to the halving because I know that's also part of why we're here to talk to you about that. But given where you've taken us on this conversation, I wonder what that means then. In certain emerging markets, we've seen really high adoption rates of Bitcoin and other cryptocurrencies, and what you've just said, underscores the risks that some people are taking. I understand the reasons. If you're not convinced that your fiat currency, your legal tender, is being managed well, then this might, relatively speaking, seem like an attractive option, but it's still sum up the risks for us.
Yeah, I mean, Bitcoin solves a problem that has vexed people for many centuries, which is how do you exchange value with someone without the use of or risk of an intermediary? I think that it solves a really important problem, especially on the internet today. And for some people, it's really a lifeblood or a really viable alternative to what they would currently be using in the absence of its existence. But it's certainly not a panacea.
If people are adopting it as a store of value in certain places where they don't trust their own currency anymore, I mean, theoretically at least, in certain democratic situations, there are ways of politically removing people who you don't like the way they manage assets. Yeah. But with this, there's a lot of trust being placed in an untested group of people, and we've seen some of them tested recently and ended up in court. A lot of faith being put perhaps in crypto bros. What risks are people taking on that front?
Well, cryptocurrencies, specifically Bitcoin, are designed to be censorship resistant, meaning that they can't be shut down by one person or entity or group. In some ways, this is a massive virtue in the sense that, you know, if you can't trust the centralized entity.
If you want it to be outside your democratic system, then that's great. But if you want it to be inside your democratic system.
Or if your system isn't democratic.
Yes.
But which oftentimes is not. Many people in the world live under authoritarian regimes. And for them, I think Bitcoin offers an interesting alternative to exchange value with people.
When we're talking about a lot about the macro, we talked about the EM as well. There's a question right now of dollar strength and rise in energy prices. Those are both going to factor into not just Bitcoin, but of course the other blockchains that come off about. Ethereum is the immediate one that comes to mind, plus the energy costs involved in actual mining. How are you thinking about a little bit more of the macro there?
Yeah, well, blissfully, Bitcoin is a little bit uncommon amongst cryptocurrencies in that most of the industry has moved on to proof of stake, which is more energy efficient. It's really Bitcoin that's left with the big bugaboo of how do you factor in energy prices, so on and so forth. Where it's interesting and intersects with miners in some provocative ways is that a lot of the people who are securing the network have their bills denominated in a separate currency than Bitcoin. So that interplay has been interesting to watch over the last few years. But Bitcoin's a really remarkably well-designed system in the sense that it's gone through a lot of volatility, but it still seems to work as intended. So credit where it's due. That's pretty hard to do 12 years out of anything.
So then talk to us about the ripple effects here. If Bitcoin is kind of the most perhaps well-known, at least in traditional finance communities when it comes to the cryptocurrency that we're watching most closely, what is the ripple effect then in Ethereum and in your own blockchain that you look at? Walk us through the ripple effects and the nuances of the market.
Yeah, I mean, the market tends to move on momentum, right? It's a very mimetic market, so you have to know the memes. And there are certain memes that make a lot of sense, and there are certain memes that don't make a lot of sense. I think, you know, the halvening is going to increase the price is one of the sillier memes, but it's only happened 3 times, so it's also not a very big sample set.
How far away are we from the point where it makes no sense for miners to keep mining? Because they're not getting the return that they want. Electricity prices, you've already alluded to. In some ways, Bitcoin is sort of digital electricity. Walk me through the process over the next 4, 8, 12 years of how this process is going to unfold.
Yeah, so one of the sillier memes, I think, is that the Bitcoin grid is like a battery. Like, you can't actually take energy out of it. So I think that's kind of a silly one. But I think, to your point, like, when will miners stop mining? I mean, geez, the price has been super volatile for all of its existence, and people have continued to mine on it. One has to believe that there's, you know, rational economic actors on that side doing the math correctly.
Okay, so they're doing the math correctly. Plug in the electricity story for me. Where does the volatility come from going forward? Is it with electricity prices? How does the bills, you talk about the fact that their bills are denominated in different currencies. I'm wondering kind of what is the genesis of the electricity, of the volatility story for Bitcoin going forward from here? Is it geopolitics? Is it energy prices? Is it kind of, what am I looking for in terms of the clues and the usefulness as a signaling tool that Bitcoin is going to generate?
Yeah, I don't know if I have a great answer for that in the sense that it's been a really wacky market to follow. It has a very humble origin story. It's kind of remarkable that there's an ETF market for it now. If you think about it, it's like a very precocious teenager. I'm not entirely sure what the future holds, but I do think, like, the way the system is designed is elegant enough and easy to reason about enough that, like, certainly it's attracted a lot of money and capital to it.
So you sort of, there's a lot of humility required then in terms of the sector and what it's achieved. But a lot of people are pretty excited about what the AI world might present. Some people suggesting that the blockchain can be used to sort of verify what contracts, for example, but also in a world of fake this and fake that, to be used as a verification tool. Do you have high expectations, Kathleen, on that front?
I would say in general, any person who's telling you that AI plus blockchain equals, like, great idea is probably overstating something or trying to sell you a token that has very specious claims. And so I'm uniformly quite skeptical. I mean, blockchain, sure, they can obviously verify things and add some sort of time stamping, but that's originally what they're supposed to do. But, you know, Haber and Sternetta also solved that in the 1960s. And so that's a pretty dated technology. It's not something that a blockchain uniquely offers you.
Okay, Kathleen, thank you very much. Thanks for joining us. Kathleen Brightman, co-founder of the Tezos blockchain. Lots to talk about this morning. We've gone let's go from crypto, which is part of the geopolitics this morning, because we saw an initial reaction that told us quite a lot to your first questions, Kathleen, about the way that investors approach this asset right now.
Yeah, it is a speculative asset. It is a risk.
Not digital gold just yet.
It is not digital gold just yet. Gold has been reacting like gold you would expect it to react, and I think that's interesting. But crypto hasn't. The correlations are maybe stronger, therefore, with what we've seen in technology. And technology stocks have taken a significant hit over the last few days, and Bitcoin feels like it has a better relationship with that sector rather than maybe into the commodity space. She was talking about volatility. We've certainly seen a lot of volatility this week. You've only got to look at what's happening with the VIX spike that we've had, and it's a similar story over here in Europe. VIX is up really sharply. We've gone from kind of 12s to 20s really fast, and a lot of people are short of this, so there's a squeeze factor into this market as well. But kind of, where do you fade this? Does it continue to go higher? If VIX continues to go higher, is this something that you want to be taking a clear signal from, i.e., you're going to get some pretty big price swings here, at maybe the amplitude of those price swings we haven't fully seen yet in terms of how big they could get.
Yeah, and for a long time we were asking, where is the VIX low? Why is it as low as it is? But not just in equity markets. We were asking, why is the bond market? We were seeing volatility there. Why is that acting as the sort of shock absorber for volatility? And yet in FX markets we weren't seeing that volatility. Maybe something's changing then, Kriti.
Yeah, the divergences that we traditionally see, or have seen, I should say, between the bond market and the FX market, kind of closing a little bit. And we talked about this yesterday as well. In the last 2 days, I would say, when we started to see that weakness show up in the euro, in cable, this dollar positioning is finally snapping because it feels like there's this narrative, there's clarity from the Federal Reserve. Whether or not that's true, the fact that they're starting to get these implications where the market is saying higher for longer, inflation re-upping is a real risk. You're now hearing that in the narrative. And I think I keep using this phrase, whether it's the dog wagging its tail or the tail wagging its dog. It feels like you can apply that to so many different circumstances here. And right now it feels like it is the markets that are then getting kind of almost validated by what you're hearing from the Fed speak.
European stocks down by 0.7% right now then, stock 600 down. Geopolitics clearly is the thing that's driving things. US futures are weaker, despite the fact we've seen quite a lot of Iranian downplaying of what's been going on here. I suppose as we head into the rest of Friday and into next week, we continue to ask questions about whether the earnings stories offset concerns around interest rate trajectory and geopolitics at this point.
The earnings season, in theory, should be the dominant force over the next few days. In theory, we're going to and next week it gets super busy.
The list is so long next week.
Precisely. Tune in, folks. Believe you me, we're going to have a busy, bumpy week next week as we try and digest all the news we're getting from some of these corporates. But if it doesn't live up to expectations, then the market feels like it's in a very rocky place. Certainly risk assets feel like they're in a very rocky place. You've got a Fed that is now pushing back on the idea of cuts. You've got geopolitical tension that is moving in the opposite direction. You've got earnings that aren't necessarily going to deliver. The equity market has had a great run at the start of this year. Are people going to be getting to the point where they're saying, you know what, it's time to take some chips off the table? Do I need to profit take at this point? You've already seen some evidence of that this week.
Yeah.
If that starts to pick up momentum, how far could it take us?
Will the AI and the growth stories be enough this time around to offset people's fears about not getting the interest rates that they were not promised at all, but assuming at the start of the year?
And this is where the geopolitics actually come into the bottom line. Because I remember last earnings season, we had these CEOs come on and say, are the Red Sea tensions showing up? And they said, not yet, but it could in a couple of months. We're a couple of months later. Is this now where you see some sort of material impact? We'll be covering that angle as well.
I've got lots of things to do this weekend. I think we should just point out Kriti's birthday this weekend. Happy birthday in advance.
Thank you. I appreciate that. I will not be having a crisis about aging. That's fine. We'll postpone that to Monday.
Not on air, anyway.
Not on air. I'll be watching the vote.
We do that in private. Thanks so much for joining us today. That is it for Markets Today. The Pulse is up next. They'll continue to take you through the weakness in markets driven by the geopolitics. This is Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly. We're Monzo. Give us a go.
See? Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
And market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Israel launches a strike on Iran, according to U.S. officials, but Iranian media appears to downplay the incident. Markets remain on edge after Middle East tensions escalate. Stocks in Europe head for a weekly loss as uncertainty stokes demand for haven assets. Plus, voters head to the polls in the world's biggest election, with the Prime Minister, Narendra Modi, seeking a third term in India. So as we're saying, markets on edge this Friday morning after an escalation in tensions in the Middle East that sent actually stocks tumbling around the world and stoked demand for haven assets, including bonds and the dollar. You can see European stocks are stabilizing somewhat, still a little bit under pressure. Oil actually pairing initial gains with Brent below $90. Now, WTI oil now also just trading above 1% was earlier. It was up as much as 4%. Gold also getting a bid today, 2,384. Now, gains for treasuries drove the 10-year yield as much as 14 basis points lower. Again, some of these market moves were really tempered as Iranian media appeared to downplay the spiraling of tensions. The details of the escalation, frankly, are still quite murky, and you can see VIX pretty elevated at 20.36. Now, blasts have been heard in Isfahan, Iran. We understood a short while ago from the IAEA that no nuclear sites have been damaged in Iran. So everyone is now watching what Iran does next. That will determine probably the broader economic impact. So let's bring in Bloomberg's Paul Wallace in Dubai with the very latest. Paul, there was concern that Iran would do this in a very heavy-handed way. How would you describe what we know so far and whether Iran now escalates further?
Hi, Francine. Well, the facts are still pretty hazy at the moment, and neither the Iranian nor the Israeli government has confirmed that there was a strike by Israel on Isfahan. But it appears there was an attack of some kind. At the moment, it looks as if it was far from extensive and probably below the threshold that would force Iran to react in kind to Israel, and certainly below the threshold for something that would trigger a regional war or a war between Israel and Iran. So I think that's something that the US, Europe, and Arab states will very much welcome. I think it's something that we're seeing markets welcoming at the moment, as you mentioned. Oil is up by less than 1% at the moment. Brent's below $88 a barrel. It did jump above 90 in very early trading this morning in Asia. Gold did the same thing. It spiked, but it's now paid most of its gains. U.S. Treasury yields fell quite heavily, but they're now up again and almost flat on the day. So I think at the moment there's a sense of calm in markets, and all the early signals, and I stress it's early and we're still finding out all the facts. The early signals from Iran are that it won't react to this, that it doesn't need to, and that it's certainly not panicking or expressing a lot of anger about this, as it often does when it's attacked by Israel or other groups. At the moment, it's reacting pretty calmly.
Paul, I mean, in these things, usually we watch out also to see what allies, for example, of Iran say. Have we heard from some of the big superpowers or smaller countries in the region and their reaction to the latest?
Not so far. We've heard from Oman, and it expressed its concern about what happens, and it reiterated that the situation in the Gulf and the wider Middle East is very tense at the moment, and there is a danger of a wider conflict. We haven't heard from the likes of Saudi Arabia or the UAE yet, and there's been no official comment from the big Western powers, the likes of the US or France or Germany or the UK so far, but I'm sure that will come at some stage today. One thing to note about Israel is that it very rarely comments on attacks linked to Iran, so there is a chance that it just says absolutely nothing about this, but it's pretty much taken as a given within Israel that Israel is behind this.
Paul, thank you so much. Paul Wallace there in Dubai for us. Now we're joined by Beata Manthi, global equity strategist at Citigroup Global Markets. A lot going on in the markets, Beata. And we're also joined to talk about oil by Bloomberg's Will Kennedy, in charge, of course, of all commodities. And here we focus on oil. I mean, I find it quite incredible. So oil spiked up, like gaining 4%, and it's now just above 1%. So is the market now discounting further escalation?
I think it was taking guard against the fact that this could have been a very big deal, and it's pairing gains on the indications, as Paul explained to you then, that this, while it is a retaliation, it seems, from what we can tell, and we don't know all the details, that it is fairly limited in scope. So I think the markets tend to react quite violently in the initial moments when people are trying to scramble to understand what's going on, and then sometimes pull back when the dust settles a little bit.
But Beata, I don't know whether, I mean, now the market is, first of all, it's been a dismal week. So if we put it into context, I mean, it's already been a pretty bruising week for equities. We've seen risk assets go up because of Fed speak and what we heard from that inflation print. But if you put this into context, you worry that the market now, dismiss this risk. And actually, we don't really know what happens next, and we don't even know what happened so far.
Absolutely. So geopolitics has been the main risk we've been flagging to our quite constructive view on equities going forward. We are not changing that yet, but definitely the latest escalation clouds this good setup that equities have had. However, for equities to move meaningfully lower on the basis of what is happening in the Middle East, we do need to see oil prices to push meaningfully higher, right, to have an implication.
Does it change on where you want to be constructive on? So if you look at some of the industries, and I know we've talked about defense in the past, but either people that make components for some of the things that are needed, do those stocks look expensive now, or is there still opportunity?
Look, this is early moments. We do not know enough details of what is going on. But the main focus, of course, is the oil prices, and it is the stock oil prices. So the oil sector that is definitely not pricing in oil prices around above $90, right? So this is the key focus. But it's also important to put things into perspective, right? That we are entering this volatile period with quite a bullish sentiment, euphoric sentiment as per some of our models. So our models were already suggesting and warning us that the market was ready to take profits. And of course, these models need a catalyst, and geopolitics could be one of them.
Will, is there an assumption, I don't know whether that's a right assumption or not, that given the, I guess, volatility of the world economy, Israel, that is usually quite precise in its striking, wouldn't touch oil facilities?
I think that's probably unlikely. I think most of the risk that traders see is an escalation that actually affects shipments out of the Persian Gulf. A fifth of the world's oil from Iran, but Iraq, Saudi Arabia, UAE is coming out of the Persian Gulf. And the scenarios that traders are most worried about are that shipping's disrupted. And of course, through the Houthis, we've seen that Iran has been willing to attack or mess with global shipping. So that, I think, is the biggest risk. But yes, I don't think that people are too worried at this stage about a direct hit on oil facilities in Iran.
So we don't know. I mean, your very good point about shipping, we actually don't know where this ends up, right, in 2-3 days.
No. I mean, there are lots of scenarios, and I think traders at the end of last week were worried to see that the Iranians seized a container ship, which they said would link to Israel, more evidence that shipping could perhaps be drawn into this situation.
I mean, is it quite likely, the fact that the media are downplaying this, what does it tell us? That there wasn't, again, that actually it wasn't a huge deal, that, there was a surgical strike, or that actually politically inside they can't be seen? Because that will also change the way they react with oil exports.
Yeah, no, look, I think that the market is clearly finding its level around $90. To push meaningful higher, you're going to have to see a bigger escalation than we saw last night. But I would also say that the flat price doesn't tell you the whole story. One of the things that we've observed over the last 2 weeks is a lot of traders in the option markets taking position to protect themselves against any escalation. So I don't think that people should be thinking the oil market isn't worried about the situation. Some of that anxiousness, some of that anxiety is not playing out in the front price, but elsewhere in the market.
Beata, we're also in full earnings season, right? Which is, again, it's always a complicated time to try and figure out what these companies are telling us and their forward guidance. Do these geopolitics, actually tensions rising in the middle of earnings season, make it much more complicated, for example, for portfolio managers to be constructive?
So it's just another catalyst for portfolio managers to think about and consider, right? So we are really watching fundamentals. At the end of the day, higher oil prices play into the margins and into the earnings, right? Too early to say, but we would like to see companies in Europe at least coming in line with the analyst expectations. There are some inflection points in the forecast, so we see earnings revisions into this reporting season that defies seasonal expectations of downgrades from the analysts. So there are some tentative signs that actually there's an inflection on the earnings and fundamental story. And of course, the geopolitics could cloud this improvement in the fundamentals. So we'll be watching for that.
Yeah, but I also want to ask you about hedging in some of the industries or some of the companies. But first, we haven't heard from OPEC Plus. I mean, would they factor this, or would they take this into account? Is there enough buffer for Saudi to put extra oil if needed?
I think that right now the policy making will still be driven by supply-demand fundamentals and looking at where they think demand's going. However, I do think one of the reasons that the market reaction perhaps has not been greater, at least on the flat price, is there is an awareness that there is a spare capacity, 3 million barrels a day in Saudi Arabia, perhaps 1 million or more in the UAE, and in extreme scenarios, that could be brought to bear.
Okay, thank you both for joining us. Bloomberg's Senior Executive Editor for Energy and Commodities, Will Kennedy, and staying with us, Beata Manthi from Citigroup Global Markets. Now, plenty more to come. This is Bloomberg.
Much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
Our top story this morning, Israel has launched a retaliatory strike on Iran following last week's missile and drone barrage from Tehran. That's according to U.S. officials, though media from both countries appear to downplay the severity of the incident. Now, still with us, Beata Manthi, global equity strategist at Citigroup Global Markets. Also joining us is Bloomberg's MLive, Noor Al-Ali. So welcome, Noor. Thank you so much for sticking around. Beata, when you look at, first of all, we have to remind everyone that we're quite thin on details. We know that a strike happened because we've spoken to U.S. officials, but we don't know exactly what was hit. So we're waiting for that news. We're talking about equities, and I guess there's a natural hedge that some industries would have done because the price of oil could have always gone up. Does that make a difference between the industries that you like and you don't?
So it makes a difference starting from the top line on the regions, right? So for us, the market, from the major markets, the market that tends to do best in this type of geopolitical flare-up, a bit of risk of and oil prices going up, is FTSE 100. So it's the UK market. So that's the one to watch as a hedge from the very top-down perspective. And then within the sectors, of course, the market will be worried about the infrastructure and supply chain constraints, disruptions, and oil prices, really. And of course, for us, within defensive sectors, it is healthcare as an ultimate defensive hedge against volatility.
And we were saying that this also comes really, frankly, at the end of a quite dismal trading week, right after we had the CPI and some pretty hawkish Fed speak. We heard some, and we saw some big moves into havens, and that's been tempered a little bit.
Yeah, absolutely, because the dynamic or the backdrop is higher yields, right? So while, as you've said, the tensions in the Middle East were, quite high into the European session, by the time we'd come in, we'd had media reports from both sides really downplay what's happened, and that's been reflected. Gold has come off the highs, yields are creeping back higher, or at least they're pairing some of the earlier drop that we've seen earlier, because the backdrop is higher yields, a bit more, even with the improvement risk sentiment, you come into the weekend, there's a lot of uncertainties at play, and it's going to be quite uncertain for traders to close out those positions, or at least there might be some hedging involved. So if you look at oil, although it's paired some of the gains, it is still higher. And if you kind of really zoom out a bit in the last 6 months, you'll see that oil has really been trekking higher, on the back of those concerns about supply, on the back of those tensions really rising. And you can say that, as Will Kennedy was saying, really play out in the options market as well. So a lot of risks are really bottled up in the markets as well.
And so, Noor, when you look, you also look at VIX. It's interesting to see, what was maybe a safe haven 10 years ago is slightly different.
Yeah, absolutely. Let's take the Swiss franc as an example. It has, done quite well for itself today, but the outlook for the currency is a lot more tied to the rates outlook right now. Japanese yen also, there are all these intervention risks that we're talking about, particularly when you're considering things like a resurging dollar, that risks to the global trade tie-in. You had Janet Yellen not really almost listened to the concerns that have come from South Korean and Japanese officials, and really you can see that dynamic of a stronger dollar really hurting everything else. So those traditional havens, barring gold, of course, which has really confused a lot of people, are not really playing in that same aspect. Not today, though. We are seeing some return to that, because where else would you go?
So we're just getting also some news from the Jerusalem Post. So this has not been confirmed by Bloomberg, but according to the Jerusalem Post, Israel has hit Iranian Air Force assets at Isfahan, of course, in Iran. Beata, we were, again, it's been a tough week, right, for positioning, as Noor says, but also we're in the middle of earnings season. So when you look at, we also in the middle, or certainly in the last 10 days, there was a definite move of divergence between what the ECB does and what the US does. So what does it mean for your like of European stocks?
So in terms of Europe, the earnings backdrop overall for this year is weaker than in the US, right? So that's number one point to make. The reporting season is going to be negative, but that has been widely expected. In the US, it's going to be a positive number. Therefore, it's easier to satisfy the negative bearish market expectations in Europe with some beats or coming in line than for very elevated market expectations in the US. So I would point out to that. And at the end of the day, coming back to the Fed and to the ECB, it's pretty certain that the ECB is going to go ahead in June. That's the right backdrop for the European corporates. We continue to like continental Europe over the US that is neutral right now. But
how difficult is it actually for the ECB? I mean, there's always this gravitational pull that we also were talking with Noor in the past from the Fed. So how difficult is it for the ECB to do it, swimmingly without any major disruption? And does that really help European corporates?
So the initial few cuts, even if the Fed doesn't do the same, according to our economists, are going to be an easy path. And then, of course, if the Fed, that's the risk, the Fed doesn't do anything, then perhaps ECB starts thinking about further cuts into the year. But overall, yes, definitely, the monetary easing helps the economy above all. And there is a 50% of revenues from the European corporates coming from the Eurozone, so definitely matters. For example, the latest upgrades that we've seen in the Eurozone, so 50 basis points higher GDP that we've upgraded, fed into 3% higher EPS. Definitely matters.
And I know we're looking, Nora, at kind of like oil being range-bound for the moment, but at what level or what kind of increase could that change the path forward for central banks?
Well, the ECB's outlook earlier this year had taken into account energy prices coming down and sort of that trickle effect on CPI or, the disinflation trend that we've been seeing, right? But the IMF had just come out with a report that says Saudi Arabia needs prices at around 96 a barrel for its balance sheet to be, to be quite balanced, right? So there's a lot at play. OPEC Plus has put a lid on supplies. You have seen reports of sanctions from the U.S. On Venezuela, potentially considering also more sanctions on Iran. We know that China buys a lot of the Iranian oil as well. There's, of course, also what's happening with Russia. Yeah. So really with oil, it is a question of supply.
Yeah.
And the fact
that it's always complex.
Yes, 100%.
Nora, thank you so much. Beata Manthi, they're a global equity strategist at Citigroup Global Markets, and Bloomberg's MLive's Noor Ali. Now, coming up, almost 1 billion Indians begin voting in the world's biggest election, which will last more than 6 weeks. We discuss how the Prime Minister is seeking a third term in power. This is Bloomberg.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's the largest electoral exercise in the world. 968 million adult Indians are eligible to cast a vote on 5.5 million voting machines. 18 million of those would be first-time voters in their teens, with a further 197 million in their 20s. 15 million polling agents will be deployed across 1 million polling stations in 543 constituencies. Some of these constituencies hold as many as 3 million voters. That's equivalent to the population of Jamaica. To keep the process safe, 2 million security personnel were deployed in the 2019 polls. That was also the world's most expensive election, with $8.7 billion spent by candidates and political parties in India. 2024's seven-phase, six-week election runs from April 19th to June 1st, with the outcome known on June 4th. Haslinda Anand, Bloomberg News.
That was Haslinda reporting on India's election. Now, voters in the world's largest democracy are heading, of course, to the polls in a vote set to last 6 weeks. Coming up, as Iran downplays an Israeli strike on its territory, we take a look at market risks and, of course, this developing story. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Israel launches a strike on Iran. That's according to U.S. officials, but Iranian media actually appear to downplay the incident. Markets remain on edge after Middle East tensions escalate. Stocks in Europe head for a weekly loss as uncertainty stokes demand for haven assets. Plus, voters head to the polls in the world's biggest election, with the Indian Prime Minister Narendra Modi seeking a third term. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So let's return to our top story, Israel's retaliatory strike on Iran. Tina Fordham, founder of Fordham Global Foresight, joins us along with Bloomberg Opinion's Mark Champion. So thank you both for joining us. Tina, I don't know whether you think this is something that will not lead to escalation or whether you worry that we just don't have the full set of facts yet, that both sides could be minimizing, but the damage could be much bigger.
I think what I would conclude at this stage is that we should stay on high alert when it comes to the risk of further escalation in the Middle East. There had been suggestions that Israel would wait until after Passover ends April 30th. Instead, we saw this strike overnight, reportedly near Isfahan. I think what's important is that Israel has shown Iran that it can fire and will fire inside Iranian territory, near a military airbase, and that this is a warning shot. The ball is now in Iran's court.
Mark, what do you think Iran does next?
Well, I mean, if you look at the signaling on television, what Iranian officials have been saying, they're playing it down. They're even trolling Israel. Sending around images of quadricopter drones next to the ballistic missiles that they sent the other day. So, to me, that is really the important signal at the moment. As you said, we don't really know exactly what the impact was, but the Iranians seem to be playing it down. That's a good thing. It creates some sort of optimism that if the Israelis leave it at this, then the Iranians are also, inclined to try and laugh it off. Whatever happened, inclined to sort of minimize it, say it was a failure, and claim victory and walk away. Which, from the point of view of whether there's any further escalation, and for the rest of us, that's good news.
We know, Tina, actually from the Jerusalem Post, or at least the Jerusalem Post is reporting that Israel actually hit an Iranian Air Force assets at Isfahan. Now, we don't, again, know the extent of the damage or what exactly they were going after, but why is Iran playing down what happened? Tina, is it something that could be dismissed, or is it that they just don't want to be seen as vulnerable?
I think they don't want to be seen as vulnerable. Again, we've got a weak regime, Iran being subject to protests for a very long time now, an aging regime, and now they're in the midst of this very tense situation. I don't think they'll reveal the extent of the damage, but I think there's a lot more that we need to look at than just the sort of attack and counterattack, right? I mean, I think, as I said, that this is a warning shot. I think that Israel may yet strike again. I think it's too early to say that the matter is concluded, but also Israel is likely to now resume its operations in earnest in the West Bank, in Gaza, that were the subject of so much international condemnation. And when it comes to the market response, there are other things that are happening that are likely to keep inflation high and oil prices high, that I think we have to look at the whole ecosystem of the geopolitical risk that's coming to the fore right now.
And Mark, a lot of people are saying, look, what we know so far about this reported attack is that it was only really designed to show the might, capability, and credibility of Israeli deterrence. Who are you watching next? So we haven't really heard from Iranian allies or other countries in the region. Are they likely to mention what happened? Or are they waiting for more news, or will we hear nothing?
Well, I mean, the important reaction is the Iranian response. As far, from reports, it seems that the Israelis also struck air defenses in Syria. So there is an element there. But by and large, at the moment, the Syrians are likely to follow Iran's cue on whatever, how to react to this, whether to try and push it further. The Syrians also have limited, capabilities to push it further without Iran's support. So I do think the Iranian response is the most important thing. Amongst the Gulf states, Oman has issued a statement which basically condemns the Israeli attack and says, we need a ceasefire in Gaza. So going to Tina's point, she's absolutely right. I think that, if this does now conclude this tit for tat between Israel and Iran, and that is an open question. We don't know if Israel will continue, but if it does conclude, nothing's changed in Gaza. Netanyahu has made it very clear he still intends to go into Rafah, and that will just refocus international attention there.
I mean, there are also reports, according to the Syrian state-run Sana news agency, which is naming Tina, an unnamed military source, that actually Israel struck some of Syria's aerial defense positions in the southern region, which resulted in material damage. So if Syria gets more sucked in, who else comes after it?
Well, the risk of a regional conflagration remains elevated, and I think that for your viewers, this is a really important point. The story isn't over. I'd add that the U.S. is also getting pressure from the UAE and Saudi saying they want the same kind of air missile defense shield that Israel has, particularly if they're going to be expected to be part of some kind of de facto regional alliance. And so the pressure on the U.S. to remain highly engaged from a security perspective in the Middle East is only going to increase.
Tina, you're very good at trying to understand, of course, the market implications of all of this. I was surprised to see oil elevated, gaining 4%, but now only gaining 1%. Why is the market discounting, at this point, further escalation?
We've been talking about this for a while, haven't we? The market still sees all news as good news. The fact that this wasn't a massive attack it has given a lot of comfort. We still see U.S. Treasury yields steepening. We still see an oil price premium. And I really think we have to bring it all together and say we are really not in an environment where the Fed is looking like it's going to do 1 or 2 rate cuts, given the inflationary pressures of this constellation of conflicts. I've warned of a spring offensive between Russia and Ukraine. The U.S. has just canceled the Venezuela sort of a truce on sanctions. All of this together means more pressure. So it's not in the the day-to-day moves so much as a collection of factors where geopolitics is increasing the risk premium.
The International Atomic Energy Agency confirmed there was no damage at nuclear sites. So this is an important thing that we have to continue to remind our viewers. But Tina, what happens next in the oil market? So now it's all about supply. Is there a worry that, for example, the Houthi rebels attack ships and that without a direct attack, which frankly would have been crazy because it would hurt the economy so much. But without a direct attack on oil facilities, we could still see very severe disruptions from the region on oil.
Of course, because what we've had most recently is a breakout from the proxy war, the long-standing proxy war between Israel and Iran, fought out through Iran's proxies, Hezbollah and the Houthi rebels. I see no reason why they won't continue their efforts to inflict damage on Israel, particularly if Israel goes in hard again on a Gaza offensive, right? So nothing has really changed in the geostrategic calculus between Israel and Iran, still bitter enemies. This is like dialing up, the volume and dialing it back down again. But the fact that this taboo has been broken on both sides suggests that this button could be pressed again.
Mark, what do you think Vladimir Putin is thinking right now? I think Tina says, these are very uncertain times, especially from now until the U.S. election, because various countries could try and act nefariously without fear of real repercussion.
Well, I mean, from his point of view, I think any kind of instability elsewhere that engages the U.S., that forces the U.S. To use its interceptors, for example, to bring out Iranian missiles down. It will have to use a lot of interceptors on Saturday. Those are in huge demand. And apart from that, sort of more important kind of political aspect, this all distracts attention, concern, and capacity to deal with Ukraine. So I think for Putin, this kind of event in the Middle East is a benefit.
All right, thank you both for really some terrific insights. Tina Fordham, founder of Fordham Global Foresight, and Mark Champion from Bloomberg Opinion. Now, coming up, there's never a dull moment, also in crypto, with more volatility this morning on the geopolitical tension ahead of the halving event, which comes every 4 years. Now, we discuss what crypto traders are pricing in. That's next, and this is Bloomberg.
Names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Now, the German Chancellor Olaf Scholz says he's sending a third Patriot air defense system to Ukraine, and more should from other EU member states. He was speaking to reporters after an informal meeting of EU leaders in Brussels. Now, with G7 foreign minister meetings today, Berlin is pushing for stronger support for Kyiv. Let's get more from Bloomberg's Oliver Crook in Berlin. So, Ollie, Ukraine's defense situation is deteriorating. We also, of course, have these escalating tensions in the Middle East. So what are Europeans leaders bringing to the table?
Right, Francine. I think that they know that there are certain limitations that they have in terms of their influence both on Iran and on Israel within the Middle East. So I think that for them, they see that their energy and their efforts are probably better spent dealing with the question of Ukraine. And even there, they're having some trouble getting additional aid to Ukraine, right? Scholz says that he'll send another Patriot defense system. He says that speaking to the other leaders of Europe that they're going to get another 6 in total by the end of the week. But Ukraine has been warning that obviously they've been running low on ammunition. They really need air defense because there's a lot more targeting by the Russians of some of their internal infrastructure, including power. And really, I think that this frustration among many of the European leaders, particularly those close to the Russian border, was sort of embodied by Donald Tusk, who went out on Twitter at the beginning of the meeting saying that if all the words that were said here in the last years in Brussels about common defense could be changed into bullets and rocket launchers, Europe would have become the strongest power in the world and the safest place, which is really echoing some of the things that we've heard of from some of the defense CEOs I spoke to in Brussels earlier this week, saying that, listen, if you want a new paradigm for European defense, you really need to boost these orders, and we need to get that order flow in order to get the capacity to where it needs to be. Add to that the G7 foreign ministers meeting in Capri right now, but for the Ukrainians and for Vladimir Putin, they're not looking at Brussels, they're not looking at Capri, they're looking at Washington, D.C., where this now it seems that Mike Johnson, leader of the House, will bring that vote to the House floor after 6 months of sort of delay by some of the disagreements within the Republican Party. That could finally bring that $61 billion package of aid desperately needed by the Ukrainians to them as early as this weekend when the vote goes through, potentially.
Ollie, thanks so much. Oliver Crook there with the very latest, of course, from the EU. Now, Bitcoin also solidly in the green after earlier falling on tensions in the Middle East. The volatility is overshadowing the Bitcoin, having expected later today that will curb new supply of the token. Let's bring Bloomberg's crypto reporter, Emily Nicole. Emily, how's Bitcoin trading this morning?
I mean, yeah, it's as you said, right? It's been very up and down along with other global risk assets. You know, Bitcoin pretty much trades within that barometer now, despite having had a stellar year last year and a pretty good start to 2024. So what we're kind of expecting as the day goes on is a little bit of that kind of haphazardness. It's been a very uncertain period of time for Bitcoin, whether it'll be up or down when the halving occurs, but that's yet to be seen.
So, Nicole, it's also, expected to undergo this major change soon. I mean, the halving is a huge deal. Can you explain it for people less familiar with it and why it matters?
So once every 4 years or so, a change happens in the Bitcoin network that makes it much harder to mine new tokens because there's a cap supply, right? So there's only so many that could ever be in existence. And what that does is it reduces the reward that miners get when they create new tokens in half, making the mining industry a lot more difficult for them as well. That generally, so far in the past, has preceded a big upswing in Bitcoin's price. Not necessarily immediately, but over a 12-month period, you might see Bitcoin go up a lot. At the time of the last halving, Bitcoin was around 10,000, and look where it's at now, around 60,000 mark. So it definitely can have that impact, but it's up in the air as to whether or not that happened this year. It's a very different environment now.
And so are we expecting a major shift in prices once it's over?
Well, if you talk to analysts at places like JP Morgan or Deutsche Bank, they cover Bitcoin now. They probably didn't cover it back in 2020.
They certainly didn't.
They think that a lot of this is already priced in. We've had a lot of big run-up for Bitcoin already because of the ETFs in the US. So whether or not that'll happen again is definitely uncertain.
Emily, thank you so much, as always, for a terrific briefing. Emily Nicole with the very latest on Bitcoin. Coming up, risk sentiment improves on reports that Iran has no plans to retaliate after a strike by Israel. We'll bring you the latest market moves next, and this is Bloomberg.
there's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Risk sentiment has improved after an escalation in tensions in the Middle East. Now, haven assets have paired gains, but risks still linger. Now, for more on all of this, we're joined by Julian Lee, our Bloomberg oil strategist, and, of course, Simon Kennedy, our senior executive editor for macro markets. There's a lot going on. I mean, this, Simon, is after a pretty dismal week, actually, for equities, because we've already seen the central bank divergence, and it kind of just adds to more volatility.
Absolutely, and those that divergence in central banks when it comes to things like bonds, it's creating a real cross-current for markets in that you see geopolitical headlines and you want to buy bonds, and you see inflation headlines and you want to sell them. And so this is a real source of tension this week and going forward.
Yeah, I mean, it was quite incredible, and I want to get some analysis from Julian in terms of oil price. But, the real, I don't even know if it was panic, but the real kind of repricing of assets today, it was pretty short-lived.
Yeah, so you respond to the headline that talks about what's going on in between Iran and Israel, and then you're moving quite quickly to, well, what does this mean next? And you saw that last weekend. Iran hits Israel last weekend, and the kind of the initial gut reaction on Sunday was probably, oh, this is going to be bad for markets. But then you're into talks of, is there going to be a cycle of retaliation? And so perhaps some of the moves that we saw initially overnight were that, oh, is this what we worried about last weekend? And then perhaps a rethinking, and you've certainly seen a bit more calmness into Europe.
Julian, how worried are you about the oil price? So we saw, again, concerns about possible Israeli strikes on oil facilities were dismissed or really never an option that was priced in. But if the Houthi rebels start impacting shipments, that could see a big spike for the price of oil.
Well, yes. I mean, I think that throughout all of this, and you can argue this has been the case since the Russian invasion of Ukraine in early 2022, we've seen all this rising geopolitical tension, both in Russia, Ukraine, and in the Middle East, and in and around the southern Red Sea. But none of that, for all the disruptions that we have seen, none of that has affected a single barrel of oil production. And so that oil is getting onto the market just as it was before. Yes, it's taking a bit longer to get to Europe from the Middle East than it does traditionally, but it's still arriving. The only production that we've lost in 2 years has been about 100,000 barrels a day from South Sudan because of a pipeline rupture north of its border in Sudan that its engineers can't get to because of the civil war there. So for all the geopolitical tension that we've seen, there's been a relatively limited impact on prices because production hasn't been affected. And I think that is going to persist unless there is an attack that actually knocks out production or the ability to ship oil out of a producing country somewhere in the Middle East, and that doesn't appear to be on the cards at the moment.
But Julian, so if geopolitical tensions escalate, how big of a buffer do we have for oil? I know the IEA is expecting, supply or at least demand actually to be hit somewhat, and then Saudi could also put extra barrels on the market if needed.
Yeah, I mean that's absolutely true. I mean there is certainly, given all of the output restraint that we've had, led by Saudi Arabia, but also coming from other big Arab producers in the Middle East. There is a lot of spare capacity within those countries at the moment that could, should they decide it's necessary, be utilized to make up for any shortfalls that might come from perhaps toughening up on the policing of sanctions on Iran, perhaps any impact on the absolute level of flows of oil out of Venezuela, given the snapback of sanctions there. So there is spare capacity, and that does provide the market with some comfort, as long as people believe that Saudi Arabia and others will be willing to use that capacity.
Simon, interesting, the havens are the same, but actually they're behaving a little bit differently, and we also look at dollars still bullish.
Absolutely, and the dollar's on a real tear. And actually, someone was pointing out on MLive this morning that all those trades that you began the year with are all faded. This idea that this would be the year to the decline of the dollar. Bond yields continue to rise. You'd have thought they'd be down by now, given that the Fed was supposed to be cutting. So yeah, so certainly the havens are reacting differently. The yen, a typical haven as well, not perhaps seeing as much there. So it's certainly a confusing outlook when you take the headline and you try and plug it into markets. It's not those easy trades are not necessarily there anymore.
Yeah, and gold's going through I guess a little bit of a different behavior than it has in the past. We saw a record high like 2 weeks ago, and this is also treasury play.
Absolutely, and so the gold's been continuing grinding higher, and some MLive again speculating this week that when gold keeps going higher, it starts to create currency crises and perhaps a bit of a kind of a inflated headline there, but perhaps at the same time, against the backdrop of these IMF meetings going on, that you see these policymakers in Washington, Gorgieva yesterday talking about treading that line carefully of saying the Fed's doing the right thing. At the same time, when you look at Biden's industrial policies, when you look at interest rates much higher than you thought they were going to be, there are kind of fallout effects elsewhere. The Koreans, the Japanese, all feeling a bit stressed.
Okay, thank you both for joining us. Simon Kennedy, they're in charge of our market news, and Julian Lee, strategist for oil. Bloomberg Brief is up next, and this is Bloomberg.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, the electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Connection lost.
Good morning from our world headquarters in New York. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. Israel strikes back at Iran, according to U.S. officials. The Iranian media appeared to downplay the severity of the incident. The Haven bid, it subsides as Brent crude briefly spikes above $90 a barrel. And Netflix crushes subscriber estimates, but warns those gains will slow. Well, it's a case of buy havens, ask questions later. The escalatory fears have flowed and ebbed. At the moment, it is an ebbing. That's really evident by the price of oil. When we get the headlines that there appear to be strikes in Iran from Israel, you immediately get the spike higher to over $90 a barrel from Brent crude. But as we get more color, we have backed off the most of the trade. We learned that apparently it seems Iran is downplaying the strikes, that they have no plans for any further strikes, according to Reuters. We're going to get more details on the ground in a moment, but the Haven bid has also backed off. Treasuries at one point, yields were lower by 14 basis points. We're lower by just 5 basis points now. Same goes for gold. The spike there also subsides, still trading at record highs. There are multiple elements fueling gold higher above $2,300. Finally, S&P futures, the grimness, the risk off, that's not going anywhere. We're down about 0.5%. We're on track for the 6th consecutive day of losses. If it holds, that would be the worst trend for the S&P since October of 2022. It didn't help that mere hours before the headlines about Iran and Israel, we had reports from Netflix, their earnings, despite them looking really good in terms of subscriber growth, the growth maybe not continuing. That sent Netflix lower 5%. Post market, not to mention John Williams, who spoke earlier in the day yesterday, flowing the kite of hikes. It is clear that there is nervousness in this market. And again, really fueled by headlines suggesting that Israel has launched a retaliatory strike on Iran, that according to 2 U.S. officials. Prime Minister Netanyahu spoke yesterday about how the country is committed to end the crisis.
We are committed also to defeating the terrorist axis in Gaza, to freeing the hostages, and also repelling the overall threat coming from Iran. These are very big tasks that require 2 things. The first thing it requires is determination. The second thing it requires is unity.
Let's get over to Bloomberg's Jomana Bersetchi, our Middle East anchor based in Dubai. So Jomana, is this in Iran that is downplaying the attack?
That's right, Danny. I think it's important to look at the context here because for most of this week, the whole world has been speculating as to what Israel's response to those unprecedented Iranian attacks on Israel over the weekend was going to look like. And of course, Israel's allies, including the U.S., have been urging the Prime Minister, Mr. Netanyahu, to exercise restraint. And yet what we saw in the early hours of this morning is that the response has actually occurred. We walked in this morning to news that there had been explosions in Isfahan, which is Iran's third largest city, but also significant because it is home to some key military bases, in addition to its geographically very close location to some key nuclear facilities within Iran as well. That is why initially you saw that massive risk-off sentiment. There were concerns at inception that there was going to be larger or sustained damage to some of those facilities. But Iranian state official media were quick to point out that no nuclear facilities had been harmed or damaged. And furthermore, they're very quick to downplay the incident. Just to give you some quotes from the Iranian local media, Tasnim, they said that there are no reports of an attack from abroad on Iran's central city of Isfahan or any part of the country. Iran's own defense air units had been triggered, and that they, according to, again, Iranian state official media, they succeeded in shooting down 3 drones. So as of yet, we have not had official commentary from senior Iranian leaders, but it is, I think, significant to note that this retaliation from Israel has finally come. Within the Israeli government, it's also worth noting as well that they officially have not taken responsibility for this attack, but we've had a short while ago had a tweet put out by the National Defense Minister, Ben Gvir, with one word only, and that is the word weak. And so this is quite important because it reflects the fact that within the Israeli government, there are certain parts of the government who would have liked to have seen a more hawkish response. And at the end, Danny, what we've seen is a retaliation, but some people are saying because it is so limited in terms of where Israel chose to strike, it is not an amplification.
Even if it's not an amplification, Jomana, it's clear that the rules of engagement have changed. This is a conflict that usually played in the shadows between Iran and Israel. It's no longer that, it's out in the open. So is there still this risk present of escalation, especially into other countries in the region?
I think, and that is a very important point to be raising at this point in time, Danny, because over the course of the last couple of years, those tensions between Iran and Israel have played out via proxies, never directly. And that is why Iran's attack on Israel last weekend was so major. It was a major development in the region because they had never directly attacked Israel. They'd in the past gone through some of their proxies, either in Syria or Hezbollah, again, a key Iranian proxy situated in the southern parts of Lebanon. And so the concern right now is that should this be amplified and drawn out into a broader regional conflict, then you will get those other proxies within the region involved as well. And indeed, Hezbollah have been on high alert. Yesterday, Israeli officials reported that more than a dozen Israeli soldiers had been killed in the northern part of Israel in response to a Hezbollah attack. So keep an eye on what's happening on the southern border of Lebanon as well.
Jomana, thank you so much. Appreciate your time. Bloomberg's Jomana Bersecci. Okay, let's get to some of the other top stories that are trending on the terminal this morning. The tit-for-tat Middle East conflict is overshadowing, as you might expect, the Bitcoin halving expected later today, which will curb new supply of the token. Halvings historically bolster the price of the largest digital asset. This time around, Bitcoin hit a record in mid-March before the event, leading to questions about whether the impact is already baked in. French cosmetics group L'Oreal is bouncing back as strength in Europe and North America offsets a slowdown in China. The company's like-for-like sales grew 9.4% in the first quarter, beating analyst estimates. Paramount shares rising in the pre-market. News that Sony and Apollo may team up for a bid in the company. Though the New York Times reports Paramount is still in exclusive talks with Skydance, that proposal has generated significant investor pushback. Netflix says subscriber gains will be lower this period and its revenue forecast slightly missed estimates. The company will stop reporting some quarterly subscriber numbers next quarter, what Wall Street mainly uses to analyze the company's growth. Coming up, we're going to get more on Netflix. We'll be speaking with CFRA's Ken Leon later this hour. But first, up next, after New York Fed President John Williams floated the possibility of a hike shaking markets, we're going to be speaking with Mads Peterson on the odds of it actually happening. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Season is here.
I think we're all asking the same question.
Just how much earnings growth they're expecting.
Bloomberg is first to break the numbers.
Gilead is coming out right now.
We have Take-Two numbers.
Shares of Pinterest.
Lucid Group coming out with its earnings.
All eyes right now on NVIDIA. A lot still to come.
With the smartest insights.
How much bigger could profit and revenue have been? Better than what the street was expecting.
Bang in line with estimates.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
It's Bloomberg Brief. I'm Danny Berger in New York. Now, less than a week after Iran's attack against Israel, U.S. officials say that Israel has launched a retaliatory attack after vowing to respond. However, Iran has downplayed the attack, and there's evidence that no nuclear facilities have been damaged. Joining us now to weigh geopolitical risk is Mads Peterson, CIO of Human Edge Investment Technology. Mads, at one point, we get an oil spike above $90 a barrel. We back off of that. We back off all of the haven bids. Is this a logical response, or are markets underestimating the odds of escalatory measures? Are we not fully prepared for that?
I don't think we're fully prepared for escalatory measures, but I think with the Iranian response, the verbal response, I think it's a rational reaction in the sense that if the Iranians decided we would like to escalate this, well, then we will get the oil price going up, we will get global inflationary pressure, just as the Fed is again fumbling a little bit with their communication, and that will then lead to higher yields, as we saw early in the morning, and then it's a problem for markets. If the Iranians say we don't need to, it wasn't very bad, so we don't feel we need to retaliate, well, then the situation is much more under control, as you can see here on the screen with the crude oil. Yeah. You know, half a dollar up on intraday, that's not bad. If we go above 90, it's of course a different story. So I think the market reaction is calm, and it looks reasonable.
If we just look at what havens were bid, even though, again, they've backed off, we did have things like Treasury and yen, two things that aren't supposed to act as havens if inflation is moving higher. I wonder what you think about the enduring nature of those two assets as havens, or are they simply havens in a gut punch, quickly go find something to protect you kind of moment?
Well, you're absolutely right in that they're the things you will reach out for just to have a diversified basket of havens. You might also want to buy some Swiss franc in that situation. I think the difference between these two assets is that the U.S. Treasury at this level is starting to look extremely interesting. The whole curve looks good. It's probably the best time in a decade to use U.S. government bond as a long-time asset class diversification. The Japanese yen, I would be more careful with. That's more of a knee-jerk reaction, which we understand, but that's not something I would put in the portfolio to hold on to value over the longer term. So I think they're very different in that respect.
Mads, whether haven or not, are you saying that bonds at the moment, yields are attractive enough to jump back in?
Well, maybe. I think it's the best time in probably a decade to consider a traditional balanced portfolio. In Europe, it's 40-60. In the US, it's 60-40. In the UK, 60-40. I think these are attractive levels. You get in future inflation times almost 2 in dollar terms. And there is a large potential for these yields if things go really wrong. Yeah, if things really go wrong, then the Fed has been talking about putting back the Fed foot in the market, and then these asset classes could perform really nicely in a balanced portfolio. And that's the best situation we've had in 50 years or something like that. So they're getting more attractive, definitely.
Well, the counter argument to that, Mads, would be that we're not done yet repricing. And you get a feel of that, for example, when you hear from New York Fed President John Williams yesterday saying that there's no rush to lower interest rates. Mads, I want you to quickly listen to what he said yesterday on his thoughts of the possibility of a hike.
It's not my baseline. My expectation right now is that interest rates are in a good place, and eventually, at some point, would want to lower interest rates as the economy really gets to the 2% inflation that we're headed towards. If the data are telling us that we would need higher interest rates to achieve our goals, then we would obviously want to do that. So it's not my base case.
Saying multiple times it's not his base case, trying to make that clear. But regardless, Mads, he has introduced hikes into the conversation. That is a bell that can't be unrung. In some regards, does that not tell you maybe we're not done pricing out cuts?
Well, it definitely tells us that what Paul said after the FOMC meeting last time, which is that maybe we're going to look at cutting faster if the economy slows. Well, that was premature. So what they're doing is they're now rolling it back, and we hope to get stability from the Fed this year, but they're still fiddling with their communication strategy, and it's not. They're coming with too many statements to keep it clean and to keep it clear. What he says is obviously correct. Of course, you cannot rule it out. I would say there's a 25-30% chance that you get a hike, but they should probably try to stabilize the communication around that they don't need to hike, instead of saying it's not my base case so many times. We know it's not his base case. That's like saying strawberries are nice in the summer. Yes, they definitely are.
But couldn't you even say, Mads, maybe the reason that they're doing this is because markets rallied so much this year and are part of the reason that they can't cut as soon as they'd want to. So it's almost, in a way, undoing some of the verbal cuts that they put into the market when they started talking about it last December.
Yep, you're right. I'm sorry we can't make a fight out of this. You're absolutely right.
We don't need to fight, Mads. It's okay.
It's okay not to fight. Yeah, it's just that they are always talking after the market. They should be talking about the economy, about what they want to do. But when they push up the economy with their previous policy, the economy is now extremely strong. They misjudged how strong the economy would be, and then they're running after their own communication. This is the problem. The benefit of this is that the Fed has now realized how dependent the economy is on the market. So if we get a big equity correction, they will understand that it's a problem for the economy, and therefore the cuts become a possibility again. So we have this nice dynamic where the bonds can be a diversification factor back again. So the good thing is that the Fed will react. The bad thing is that they like to talk a lot about how they would react, and that doesn't help anything.
Hey, Mads, we have less than a minute, but I can't let you go without talking about your full bull portfolio and your dynamic portfolio. At the start of last year, you won 100% equities. You holding on to that? What's the outlook?
We still have 100% equities, which in a fund means 99. We need a little bit of cash, but yes, until the stimulus unwinds, so as long as the spreads stay tight, we will hold on to it, but the case is looking weaker. We bought most of the equities in December, and we might have to cut maybe 20 or 40% of the equity position in the coming weeks unless things stabilize.
All right, well, I expect a note in my inbox once you do that, Mads, and another appearance here on Bloomberg Brief. Thank you so much for joining this morning. Enjoy your weekend, Mads. Mads Peterson of Human Edge Investment Technology. A quick check on bonds, which Mads says is possibly one of the best opportunities in the past decade, and we are buying this morning, not as much as we were. We were down by 14 basis points on your 10-year yield, now just under 5 basis points. Still getting a bid for both Germany and the UK, respectively 3 and 2.5 basis points lower. This is Bloomberg.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the This is Bloomberg Brief. I'm Danny Berger in New York. Saudi Arabia wants to compete with Dubai for international travelers with ambitions to attract as many as 70 million arrivals a year by 2030. Manis isn't here with me this morning, but he did earlier in the week speak to the kingdom's Minister of Tourism, who told Manis Cranny more about how the current tensions could impact that goal.
The Middle East have been always historically in tension. We look at this very serious, and we hope it will not impact the trade and travel and tourism to this part of the world.
So you've had a double-digit growth year on year in the first quarter.
Absolutely.
I'm curious then, how much of that has been religious tourism and how much of that has been global tourism? Because that's the That is the objective, isn't it? To balance, to rebalance.
Absolutely. It's about 50-50 because we have the holy month of Ramadan in the first part of the holy month of Ramadan in the first quarter.
If I said to you, when does Saudi tourism become an investable asset? What is a reasonable answer to that?
We are delivering
a realistic answer.
We are delivering visitors. The market is attractive. I'll be honest with you. Saudi Arabia used to rely completely on religious tourism, and since we launched the tourism visa back in 2019, we started to receive tourists for other purposes. And last year we had like 14-15 million coming to explore Saudi Arabia and to sit and stay in new hotels and to experience new experiences.
How important is Riyadh Air to that ambition? I mean, it's the new airline, the planes are ordered. I mean, Tony Douglas is there. Is that going to be the turnkey? Because that's what it was for Dubai.
Yeah, absolutely.
If we think about Emirates, Dubai, and here we are, Riyadh Air with Saudi.
Riyadh Air will be fundamental to support achieving the tourism ambitions, and therefore it is very important for us. He's ordering planes, but at the same time we have a program called Air Connectivity Program, where we provide incentives to other carriers to fly direct flights to the different Saudi cities. And, starting from China Airlines, some European airlines, Wizz Air started to fly to Saudi Arabia 3-4 years ago, and many other airlines on the queue to make sure that we will carry the 70 million that we are targeting to bring to Saudi Arabia by 2030.
The next question you have been asked 50 different ways. There's an obsession in the West with alcohol. There's an obsession with, can I get a glass of wine? Can I have a glass of wine with my dinner? My question to you is, does it change the dial for tourism? Do you think delivering alcohol in Saudi Arabia would materially change the numbers for tourism?
I'll tell you something. So far, we have not faced challenges. I completely agree with you. Alcohol is important, but we decided not to offer it. And so far, people are coming, exploring Saudi Arabia, coming for business, coming for leisure, coming for religious reasons, and they have not complained. They are enjoying other offering like the food, the retail, the Saudi hospitality, the culture, and I hope it will continue with this,
That was Saudi Arabia's Minister of Tourism speaking to Manish Krani. Some breaking lines now coming from Iran state media saying that the attempted Israeli drone attack failed. This is a somewhat of a shift in tone because previously the state media had said that yes, that there had been strikes, but no reports of foreign attack against Israel. That was the word overnight, but now they are saying that the attempted Israeli drone attack failed. It's quite a different message than what we're getting from the Israeli state media, or Israeli media rather. The Jerusalem Post saying that the attack sends a message to Iran that it, quote, could do worse. We've also heard from Israelis Ben-Gvir suggesting that the attack on Iran was, quote, weak. At the same time, some more breaking lines from the journal Biden now weighing over $1 billion in new arms for Israel. So this is a developing story. We'll keep you on it. But at the moment, the reporting suggests from Reuters that Iran has no plans to retaliate. This is Bloomberg.
my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Rain World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome back to Bloomberg Brief. I'm Danny Berger in New York. Here's what you need to know. Israel strikes back at Iran, according to U.S. officials, though Iranian media appear to downplay the severity of the incident. The Haven bid subsides as Brent crude briefly spikes above $90 a barrel, and Netflix crushes subscriber estimates but warns those gains will slow. The latest line out of the Iran state media saying that the attempted Israeli drone attack failed. Again, this is part of the language that's being used that seems to suggest that Iran is downplaying this attack. Reuters also reporting earlier in the morning that they have no plans for retaliation. That's why the price action looks as such. A spike above $90 a barrel when we initially get reports that there were drone strikes above Iran. Iran media reporting them too, but again saying that they successfully thwarted them. Then you also get reports that no nuclear sites were hit in Iran either. And then we go to barely changed on the price of Brent crude. The same happens across asset classes. Yes, there is still a bid coming in for treasuries, but at the moment, the dollar is basically flat. Euro versus the dollar, that is also little change this morning too. Treasuries at the moment, yields are still moving lower, but we're just talking to Mads Peterson over at Human Edge Investment, who basically said this is potentially one of the best opportunities in a decade for yields. Haven bid or not, yields are high enough and they are juicy at the moment. And there's Brent crude up 0.6%. I'm not sure if we have stocks, but stocks at the moment still trending lower this morning. Equities on track for their 6th consecutive day of losses. And if it does that, it would be the worst streak of losses since October 2022. One stock that we are keeping an eye on, it is Netflix. Shares are extending declines in the pre-market trade, even though the streamer service crushed the street's estimates for subscriber gains. Why the declines then? Why down 6 1/3%? Analysts are concerned that the firm's decision to stop reporting paid quarterly membership and revenue per subscriber might mean it's shifting the focus to something else, specifically sales and profit.
We're not going to be silent on members as well. We'll periodically update when we grow and we hit certain major milestones. We'll announce those. It's just not going to be part of our regular reporting. And we want to do all of this thoughtfully and give everyone time to adjust this transition. So we're going to continue to report subscribers until Q1 of next year.
Joining us now is Ken Leon, Director of Equity Research at CFRA. He has a price target of $650 and a buy rating on Netflix. Ken, great to see you this morning. Thanks for joining. So Netflix is one of the top performers in the S&P this year. It's added $112 billion this alone, 13% away from its all-time high. Was this an earnings report that just didn't justify the price?
Well, it's great to be with you. So results were fine, and even the outlook for this year
13 to 15% guided revenue growth. We're talking about $38-39 billion of revenue. Operating margins, 26-28% range. So that's the fundamentals. But I think for investors and their investment committees are going to be thinking about, is this because of the size of the company entering a more mature stage where growth might be an issue? That's the problem on valuation. I think when we look at Netflix, it's hard really to put a conventional valuation of price to earnings, so we use different metrics. What it suggests is that companies go through life cycles, and I think the stock is down today because everyone is trying to calibrate if this is a slightly slower company or a company where you have to value on something called GARP, growth at a reasonable price.
Ken, what's your take? Which is it?
I think we're moving into the second stage of just maturity because unfortunately, unlike a Microsoft or anyone that benefits from AI, we just don't have that with video streaming. This is a high quality company for growth, but again, it's entering a stage where the numbers just don't grow to the sky.
Well, to that point, if we look at where they've squeezed growth from in the past year, it was a password crackdown, and then it was this ad-supported platform or ad-supported level of paid subscription for Netflix. Does Netflix just not have any of those levers left to really ramp up growth again?
Well, they do, but they're almost, finite numbers. They're not numbers that go to infinite like AI. So it again hurts the future years of valuing a company, mostly because the growth rates are going to be smaller. It doesn't take away from Netflix leadership, the pivot from linear to video streaming. Video streaming now gained 200 basis points to 38% market share. In the earnings release, Netflix has about 8 or 9% market share. It's just you just can't move the numbers to the sky.
The competition is also here, and it is real, Ken. Walt Disney, Paramount Plus, Hulu, Apple TV. Does Netflix come out the winner of all of that? It is at the moment, but can it hold on to it?
Well, Netflix really looks to be the leader and certainly does things to enhance member retention and getting them delighted so that they retain subscription. And I think the other issue is, which bothers analysts, is that the penetration rate I mentioned is still low, yet the management doesn't have the confidence to give you disclosure on subscriber numbers, given that they can capture that anywhere in the world on a sizable customer base today, but much bigger opportunity. So, I mean, that's what perplexes investors.
I mean, part of what they're doing to retain the customers is leaning more into sports. We heard about their partnership with WE Raw. On the other side of things, Ken, not that we've heard much of it since it was announced, but there was this sports streaming partnership venture coming from ESPN, Fox, Warner Bros. Discovery. We still are waiting to hear what the contours, even what the name of that will look like. But does that put Netflix at a significant disadvantage to not be a part of whatever this thing is?
So all the entertainment companies in video or music, but video are looking to capture people's time. And that extends from just video entertainment to sports or even gaming and gambling. And I think when you put that all together, Netflix has been very thoughtful. They have a $1 billion multi-year contract with WWE, Worldwide Wrestling Enterprises. It's looking mostly to keep customers on their viewing, mostly with sports documentaries. So it's kind of an interesting dynamic one, I think, that they have a pretty good handle on. We're just perplexed. Why wouldn't you give subscriber numbers? That's the real issue.
Yeah, okay, let's just stick with that then. If it is the real issue, one of the theories, as you say, Ken, is just that this is a maturing company. It wants to kind of say, look, it's more about sales and profit. What else could the other options be? Is it just that they expect it to be so bad they don't want it out there in the open anymore?
Yeah, so they have just under 297 million subscribers, or what they call members. It's widely distributed, not just The Americas at 83 million, but 92 million in Europe, 48 million in Latin America, and 48 million in Asia. I still think there's room for opportunity, to my point about penetration of the market and this tsunami shift from linear to streaming. I just think they're just a little less confident and don't want to surprise on the downside. But you can see the stock is down overnight because the analysts are saying maybe this is a more mature company.
Yeah, I mean, it's one of these things that in trying to perhaps protect themselves, they actually inflict injury, at least in the medium term. I guess that's the question, Ken. How long does this injury continue? If they continue, again, as they plan, starting in the first quarter of 2025, to not report these subscriber numbers, is it something that the market is continuously going to be saying, hey, sales and profit, that looks nice, but at the end of the day, we want to hear how many quote-unquote members you got?
I think they're going to course correct the two CEOs. I mean, this is a very good management, but you go back in time, well over 10 years ago, there have been stumblings when you make kind of when they make a decision what they want to communicate to investors. Reed Hastings, the founder, and then they made the adjustment again. So I think it's one of those situations where there's nothing wrong with the business itself, the opportunity, or what investors call the TAM, total addressable market, the low penetration rate, best in class, Disney, bring them all on, whether it's YouTube or TikTok. Netflix is a superb franchise, but I think they tripped over their feet today.
Right. Well, I'll tell you what, Ken, I plan to spend this weekend watching Three Body Problem. Take that as you will. Ken, thank you so much for your time. Ken Leon of CFRA. Okay, just to recap some of the most recent lines we have learned over the Iran and Israel conflict, one of them being that Biden, according to the Wall Street Journal, is weighing over $1 billion in new weapons deals for Israel. To be sure, a deal would be a drawn-out process by Congress. However, this comes off the bat of other foreign aid that Congress is attempting to pass. The other headline breaking over the recent minutes, Iran state media saying that an attempted Israeli drone attack failed. This is the first time that Iran has acknowledged that the drone attack, which again some media is reporting are missiles, not drones, but the first time that Iran is saying that it is indeed coming from Israel. The Israelis themselves maintain an official silence on the attack. However, there are some officials saying, quoting things like, quote, weak, that perhaps the attack wasn't enough. But again, Iran acknowledging for the first time that this has come from Israel. More to come here on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The top names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
all these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
You're watching Bloomberg Brief, Danny Berger in New York. Now, the Biden administration is said to be weighing more than $1 billion in new arms for Israel, that according to a report from the Wall Street Journal. The weapons deal would include tank ammunition, military vehicles, and mortar rounds. Let's bring in Bloomberg's Oliver Crook for more. Oliver, I know the team in Bloomberg is out to the White House to confirm this. But what does it look like this package, this deal for Israeli aid would look like, and how difficult will it be to actually get it through Congress?
Yeah, let's look through the sort of the different parts that we've seen from the Wall Street Journal. So we understand this is more than $1 billion that is being suggested from the White House here. The first $700 million will go to tank ammunition, about $500 million tactical vehicles, and just under $100 million on mortar rounds. And that is in addition, Danny, critically to that House bill that is now going to potentially be voted on as early as tomorrow that Mike Johnson is putting on the floor of the House that has been stalled, that has all that extra aid, yes, to Israel, but also to Ukraine, to Gaza, to the Indo-Pacific, that we might get some motion on. And what's important and what's significant about this other deal, over $1 billion worth of it, is that it's among one of the largest transfers, sales, I should say, of American weapons to Israel since the beginning of the war. And it is one of the first new deals, right? A lot of the stuff that has been transferred to Israel are pre-existing contracts that have already been set up with Israel to the tune of $25 billion. And this is where it gets sort of complicated because, of course, there has been a lot of criticism, even from the White House and the United States, of Benjamin Netanyahu and how he's conducting the war. It seems that they're willing to push forward. The question is, will Democrats and others within the U.S. government be as willing to push this through?
And along with that, you mentioned, Ollie, that we're also going to have this other package for foreign aid. I mean, this is one that had been held up, but Mike Johnson really seems bent on getting this through, despite those opposing him on more to the right, saying that this would be a reason to oust him. But he's pushing ahead with it. What are the contours of this?
Yeah, so this is a really interesting sort of turn. Obviously, this has been stuck in the House for about 6 months and really held up by the Freedom Caucus and everything that had to do with how the speakership had been set up under Kevin McCarthy. And now you have Mike Johnson saying basically he says that you need to put this forward. You need to let the House vote their conscience on this bill. For him, he sees the issues of China, of Iran, and of Russia as all connected. He's called it a new sort of axis of evil. So he says that we need to the United States needs to be able to vote on this. So this is going to contain the Ukraine aid, $61 billion, but it will also, now we understand, have an expanded role of including more sanctions on Iranian crude. There is a question about how effective that can be, right? There are already a huge number of sanctions on Iranian crude. So this is going to sort of target some of the ship-to-ship transfers we have. But what I found interesting is also some of the secondary transactions between Chinese financial institutions and sanctioned Iranian banks that are used to purchase oil. Remember, about 80% of the oil that comes out of Iran, about 1.5 million barrels a day, goes into China and is refined there by independent producers.
Yeah, I mean, it's a good point because Iran is exporting at the moment, Oliver, more oil than any time over the past 6 years. It really is the art of circumvention which they've nailed. So again, how can the U.S. have an impact? It's probably by going to China. Oliver, thank you so much. Oliver Crook there on the latest from the House. Now, as we await House votes on additional aid for Ukraine, defense spending by NATO members has also been in focus. The IMF is, of course, taking place in D.C., and during which I caught up with the Greek finance minister, Kostis Hatzidakis, who again is in Washington for the IMF World Bank spring meetings.
We had an interesting meeting with Secretary Yellen some months ago in Brussels in the Eurogroup meeting. We exchanged views and we have a good cooperation. We have to focus our efforts on Europe, on the policies we implement in Europe. I think the key word for us is competitiveness, regardless of the policies adopted here in Washington, D.C. Now there are some very interesting reports in Brussels focusing exactly on this issue, single market, competitiveness of Europe, and we try to have a constructive role in adapting the European policy to the new realities. Certainly, as far as Europe is concerned, we have to be more competitive in the near future.
In terms of another conversation that's very present in a U.S. election year is defense spending. Greece is one of the countries that has surpassed the 2% goal set by NATO, something Trump has been very critical of other NATO members not matching. We are in the midst of now 2 hot wars popping up in only the past few years. Are those criticisms, do they have a point, Minister? Do other NATO countries need to start spending more on defense?
Yeah. You see, as you may know, we spent 3% in defense expenditure. We are the second country as regards ranking in the European NATO countries after Poland. We have met the criteria set, and I think that all the member states should comply with the rules. This is the reason why we have an alliance. There are rules, and we have to comply with the rules. This is our message, and it is very simple.
What is the risk of non-compliance, Minister?
We take seriously our experience in the past. Our country didn't comply with the rules of the European Union at the time, the monetary union. We were living beyond our means, and we paid for that. I think the reason why we have these alliances, be it the European Union or NATO, is for those alliances to have an added value. And in order for them to have the added value, the member states should follow the rules. It is very simple. And I think that given the turbulent period of time we are living, Russia's aggression in Ukraine and so on, I think that all the member states are getting this message, and I think that all the member states will do their part. This is what I wish, at least.
Minister, we're almost out of time, but before I let you go, I mentioned that a lot of the galvanizing of this mention had come from Trump. Do you think Europe is ready if there is a Trump 2.0?
The American people will decide. Will not dictate. We cannot dictate.
Of course, but do you think Europe will be ready for that?
I refer to the Europeans who will respect the decision of the American voters and will try to cooperate with the other side of the Atlantic. I believe, and I firmly believe, really, that taking into account international turbulences, both the European Union and the United States are condemned, I would say, to cooperate. It wouldn't be a wise decision to ignore the modern challenges and proceed alone. Of course, there are different interests. I don't underestimate this aspect, but on the other hand, we have a lot in common, the same principles, and to some extent, the same interests. So we have to cooperate, and I think that we'll achieve this objective.
The Greek finance minister saying you should follow the rules, speaking with me yesterday from the IMF meetings in Washington. A quick check on your haven currencies this morning. The Swiss franc clearly has come out the winner in all of this, but most of the gains, they have backed off, as it does seem that the response from Iran is limited. We're down about 0.5% on dollar versus the Swissy. We also get some backing off of the higher pricing in the yen, but come on, could that really last given the macro environment, given the rate differentials? Dollar now essentially flat again. The latest lines coming from Iranian state media, they are acknowledging that it is indeed Israel. They are saying it is drone strikes and that they failed. Of course, media reports from Israel say that the attack involved missiles. The official line from Israel so far is one of non-acknowledgement. Coming up, we're going to take a look at some of the market moving events for you to watch out throughout the day here on Bloomberg.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg. Top experts. Great questions.
This is Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up now for your trading day with a look at what's ahead. American Express will be reporting its earnings before the bell. Then Chicago Fed President Austin Goolsbee participates in moderating a Q&A at 10:30 a.m. Eastern. India's elections then begin with Prime Minister Modi seeking a third term with over 900 million people eligible to vote. Now, it's moving in the pre-market. Netflix is falling as its second quarter revenue forecast was a slight disappointment, but it absolutely crushed subscriber expectations. But soon they're not going to report subscriber growth anymore. Paramount shares, those are jumping. Apollo and Sony are said to be considering a joint offer for the media company, up some 10.2%. Coinbase also rising as Bitcoin rebounds from its losses. We're getting the Bitcoin halving over the weekend, but some of the Bitcoin bid coming in with a bid for the rest of havens which is subsiding. Stocks, though, are still lower. We're on track for our 6th consecutive day of losses for this U.S. equity market. Should it hold, it would be the worst since October 2022. We're still monitoring the lines of Iran and Israel. We'll have that for you on Surveillance, which is up next. This is Bloomberg.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
The basic fact is growth has surprised persistently, for the last year.
The U.S. is quite boomy right now. That does not seem like an economy that has restrictive monetary policy.
From just a growth perspective, we're exceeding expectations, but people are still nervous.
The question is, for the next 10, 15 years, is inflation at 2.5% or 3%? And the economy is perfectly fine with that and can continue to grow.
The U.S. is performing in an exceptional way. The question is, that sustainable or temporary?
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from the nation's capital for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance. The latest overnight. Israel said it would respond. Reportedly, it has responded. Long-range missiles targeting an Iranian Air Force facility. And the moves in crude, maybe not as obvious as you might think. We're lower. We're negative across the board. Let's bring up the board. WTI and Brent a little bit softer on the session. Most instructive, Bramo, what they didn't hit and Iran's response to it.
Basically, this was signaling. They didn't hit any of the nuclear sites, and that was sort of the big fear that would cause some sort of retaliation by Iranian officials. But they did target specific areas by drone, the idea being this is messaging, we can do more if we want to.
So, Anne-Marie, a couple of questions, I think. Have they demonstrated superior capability after the strikes from Iran on Israel? And do you think that's going to reinforce more of a deterrence for the Iranians going forward?
Absolutely, in the sense that they took that fine line we've been talking about for weeks. How do you have an attack without sparking some retaliation cycle, this revenge cycle that they want to try to de-escalate? So it's an attack, but it's a de-escalation as well. And already there's reports that Iran says they're not going to strike Israel after this. They were sending a clear message. And that's why you see Brent pulling back. Goldman Sachs this week said already there's $5 to $10 a barrel already in geopolitical risk premium into these markets, but futures may fall without escalation. This is not escalation. This is just capability showing that we can hit these targets if we wanted to.
Okay, I'm just going to say for now, because you have to think, okay, this is a tit for tat. For now, Iran's not going to respond. For now, Israel isn't going to go after any of the more sensitive sites, but they're showing they've got the capability to do so. And right now, it seems like within Israel, there is a feeling, as one of the representatives said, this is weak. So you do have that push on one side for a little bit more.
Yeah, I think we end the week how we started the week, which was a couple of words that's been familiar to this program over the last few days. Contained but not calm. And not calm was how you phrased things on Monday. And I think that's still true this Friday.
It is. What I found really interesting in markets was how markets actually responded. Because suddenly, where are the haven trades? Treasuries. How does this work? At what point does that break down, given the fact that ultimately, if you do get some kind of curtailing of oil flows, that is going to be fundamentally inflationary. So there's some real questions here about what calm means and what an escalation means beyond just this particular region.
Big turnaround in equity futures. Equity futures overnight were down by more than 1 full percentage point at the moment. If we get to the board, equity futures at the moment, negative 0.4% on the S&P 500. Lisa talking about that bid into bonds, it sticks. Yields are lower by 5 basis points on a 10-year, 457.96. On the south side going into the weekend, no to the morning so far. I salute you, Michael Hartnett, over at Bank of America. If the dove don't fit. That's in the note this morning, in the Flow Show, the Bank of America regular weekly note.
Yeah, well, and what he was talking about is that, and I'm going to use this because he used this, good economic news is starting to be bad news for stocks. I started reading this. I'm like, yes, we get to talk about good news is bad news, bad news is bad news. And I know that you love that so much, so I was excited for that. But this idea that we've had the biggest 2 weekly outflow from U.S. equity funds going back to December of 2022, there has been a shift where higher yields are punitive for equity valuations where they are.
There's been a shift as well in the Fed speak. I think we have to acknowledge that. I don't think the base case has shifted just yet for many of the policymakers on the FOMC, but let's pick out 2 policymakers in the last 24 hours. Let's go with New York's John Williams, and we can go with Kashkari of Minneapolis. Kashkari entertaining the idea that there might not be cuts until 2025. John Williams, not his base case, we'll be clear about that, just entertaining the idea that if inflation demands it, they can push interest rates higher. Now, I'm not suggesting they're going to hike anytime soon, anything but I think they know what they're doing. When a Fed official comes out and uses that kind of language, they know exactly what they're doing. Are they pushing for tighter financial conditions?
I will just take this a step further and say that this is a pivot from the pivot, because this is John Williams, who essentially was one of the bigger doves on the committee, coming out and raising the prospect of a hike at a time where they know how badly that's going to resonate on Wall Street.
So it's a U-turn then? Is that what you're saying? The Fed is actually making a U-turn?
The pivot on the pivot is the U-turn?
It's not a U-turn.
It's not a U-turn.
Because that's deliberate.
Should we do that another time? We should do this in commercial breaks and maybe not live on the programme. Coming up this hour, Victoria Fernandez of Crossmark as investors weigh outside risk in the middle of earnings season. Douglas Redeker of International Capital Strategies as Israel responds with a direct strike on Iran. And Tobias Adrian of the IMF on the last mile of disinflation. We begin with our top story in this market. Investors weighing geopolitical risks and a more hawkish Fed as earnings season ramps up. Victoria Fernandez of Crossmark saying this: we will need to see earnings be the driver of further stock price appreciation. Over 70% of the S&P 500 companies have issued EPS guidance for Q1, have actually lowered estimates. Victoria joins us now for more. Victoria, great to catch up. We need to talk about the Middle East, the Fed speak. Let's start with the earnings. Are you saying that earnings won't be able to do the heavy lifting going into year end?
I'm not sure they're going to be able to do as much heavy lifting as the market is anticipating. They're still looking at double-digit earnings growth. I think that's a big stretch. Obviously, we're just about a week and a half in to earnings right now. Banks were okay. The market didn't have big moves on that. And obviously, we haven't hit a lot of those growth companies yet that tend to move the market a little bit more. But we're not seeing the lift that I think we're going to need to see in order for valuations to stay at a 21, 21 and a half, 22 times earnings that we're seeing. I think we're going to have a pullback somewhere in there, and earnings is probably going to be the catalyst for that to happen.
Victoria, last time we spoke, you were looking for economic weakness. I've got to ask the question, where is it?
Yeah, you know, I expected that we would have seen more of that by now. There are some elements in there, and I guess weakness, John, we have to look and see, how do we want to categorize that? Is weakness in the economy going to be the fact that the numbers are stronger and therefore the Fed is going to keep rates higher for longer, and that puts more pressure on the economy? It's very much kind of a cycle when you get going there. But the consumer continues to be strong until we see the weakness in the labor market. I don't think we're going to see that flow through to the rest of the economy. That's what we're waiting on. And it could be earnings. We're just talking about that. It could be margin pressure from earnings as pricing power starts to erode that is going to begin that cycle of pressure.
Victoria, am I hearing from you? And I hate to do this. I'm so sorry. But the good news is bad news.
I knew it was coming.
Bad news. And that right now we're looking at stocks that are poised for some sort of additional downturn, additional to what we've seen over the past 5 and maybe 6 sessions.
Yeah, you know what, a month ago, Lisa, I think everything was good news. It didn't matter what came out. It was all positive. It was all good news. Momentum was really driving the market. And now I do think we're starting to see a little bit of shift in that, a lot because of what's come out from Fed speak, but also because I think people are concerned that we're not going to see the growth expectations that maybe were anticipated. So there's a lot of pressure on a handful of stocks. We know that. We'll see the earnings come through on those. Netflix obviously did better, but guidance was poor, so that stock is down. We'll see what happens with the rest of the handful of those stocks, but the momentum isn't what's driving us anymore, and I think that's key when we're looking. Low momentum names have actually outperformed high momentum over the last week. So I think we do have to take a step back. The equal weight S&P is below the peak that it had in early 2022. I think that's telling us that we're starting to see some worry come into this market.
So, Victoria, what do you do with this, considering the fact that everyone just seems to be piling into oil stocks? So those have been getting a massive bid. Bonds are all over the place. I can't come up with a consistent narrative. And then gold, a lot of people are saying maybe has gone a little too far. So what do you do?
Well, I think you have to have some defensive components in your portfolio. We've talked about that before, and you know that we like the bond market as well, locking in some of the income that you can get in a barbell, both on the short end of the curve and the longer end of the curve to do that. But look, utilities are moving higher, even as rates are moving higher, which typically you don't see. You look at the telecom sector, again, another good defensive play that you can put in your portfolio. So there's some areas that you can go into to add some defensive posture, some low beta, some strong cash flow names. I think that's what you have to do right now as you wait to see how things play out over the next couple quarters.
Well, Victoria, as we wait to see how things play out, we're waking up to a world where we did see retaliatory strikes from Israel on Iran, and the market is just shrugging this off. Do you expect this to continue to be basically the status quo until there is serious confrontation in the Gulf?
Yeah, I think there's going to be a lot of turning going on here, Anne-Marie. I mean, obviously, the retaliation that we saw from Israel, many people are saying, yes, it was just a warning shot. It's just kind of letting them know we're here. And, you know, there's that phrase, kind of mess around and find out what's going to happen. And I think that's what they were doing, which is why markets have rebounded from what we saw overnight. So I don't think that we'll see a huge shift today unless there's more action coming. But I can't imagine that this is going to be it. I can't imagine we're done. There's going to be more pressure coming from geopolitical events, along with the elements that we have going in Congress. We've got 4 aid bills sitting there right now that need to be voted on. So I think there's a lot more coming, which is just going to cause more churning and more volatility in this market.
Do you think that puts a floor under crude? Because we have had a week of losses in the crude market. WTI and Brent pulling back, mid-80s on Brent, low 80s on WTI. What kind of a floor do you think is in the energy market?
Yeah, I don't know a number, Jonathan, on the floor for the market, but seeing the rally that we had overnight above 90 on Brent and the fact that it's pulled back to where it is now, I think you're looking at kind of a consolidation trade where we are here in the mid to low 80s. I would expect that we would stay somewhere in this range. And you're looking at OPEC Plus. I haven't seen any statement come out from them, but as of late, they're saying, look, we're going to continue with the cuts that are in place. They're not looking to add any more supply. And as China starts to ramp up a little bit, you've got some more demand coming in. So I think we could move closer to that $90 range than to, say, a $75 or $80.
So the big rotation, the elusive rotation that everyone was positioning for out of Q1 has faced a bit of a challenge, particularly for the small caps. Energy really started to work in the month of March coming into April. Victoria, is that a trade in the equity market that you want to stick with?
I think you have to stick with it for now, and I'm not just saying that because I live in Houston, right, and I'm trying to pump up the energy trade, but small caps have taken a really tough hit on the chin, and look, we think we're going to see some more correction. If you go down for the S&P 10%, that's down to the 200-day moving average. I wouldn't be surprised if we start to go closer to that level, and small caps are just going to continue to struggle. We need to see better economic strength globally, and I think we need to see the Fed have a fair plan laid out before we start to see a rebound in the market. That's when you're going to want to go into small caps. Energy continues to be a strong play with the good cash flow that they're seeing on their balance sheets.
Hey, Victoria, great to catch up to close out the week with you. Victoria Fernandez there of Crossmark. Big repricing higher in interest rates over the last few months has really hammered the small caps. Another tough week, another struggle. Looking at crude, we're down about 0.5% on Brent, down about 0.3 on WTI. Let's give you an update on stories elsewhere. Here is your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. 12 jurors and one alternative have been selected for Donald Trump's trial in New York. It's his first trial and the first ever criminal trial against a former president. Opening arguments in the case could start as soon as Monday. Trump also faces 3 other criminal prosecutions. He's denied wrongdoing and claims the cases are part of a political witch hunt against him. Paramount shares surging in the pre-market, up more than 10% after a report that Sony and Apollo are considering a joint bid for the company. Paramount is in exclusive talks with Skydance, but the proposal has generated significant investor pushback, all that according to the New York Times. Apple has removed WhatsApp from its Chinese App Store at Beijing's request. Threads, Telegram, and Signal have also reportedly been removed. Apple said the country's Cyberspace Administration ordered that social media apps be removed over national security concerns. If that sounds familiar, it's because the U.S. has also cited national security concerns in a politician's push to force a sale or a ban of TikTok. And that's your Bloomberg Brief. John.
Hey, Danny, thank you. Appreciate it. You spot the difference, though. The difference in how things get done in China versus the United States. We're still working this out in Congress. In China, it's just like, bang, Apple, done.
There's a healthy debate in China, what they call the Great Firewall. We want to get rid of some of this stuff. We want to control some of the communication, and it's done overnight.
Just like that. Coming up on the program, up next, Israel retaliates.
Israeli retaliation will likely be proportional. It will likely be limited. It will likely be something that is meant to demonstrate we can touch you in ways that hurt.
And it looks like that's exactly what it was overnight. That conversation up next, live from Washington. Good morning.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Equity markets recovering from overnight losses on the S&P 500, negative by something like 0.4%, down a lot more than that. Late yesterday evening, we were down by more than 1 full percentage point. Yields, though, still lower. Heading south, we're down by 6 basis points, 456.73, and crude settling down, softer by 0.6% on WTI 82.26. Under surveillance this morning, Israel retaliates.
Israeli retaliation will likely be proportional. It will likely be limited. It will likely be something that is meant to demonstrate we can touch you in ways that hurt. And for that reason, I think Israel is also not looking for a conventional war itself.
It's the latest this morning. Israel launching a retaliatory strike against Iran, according to U.S. officials. Iranian media reporting an explosion in the country's third largest city. The IAEA saying no damage was done to nuclear sites. The news adding to pressure in Congress as the House looks to pass a $96 billion aid package for Israel, Ukraine and Taiwan this weekend. Douglas Redeker, founder of International Capital Strategies, joins us around the table this morning. Doug, good morning to you.
Morning.
It's good to see you. Do you believe that Iran, based on reports, has just witnessed superior capability coming out of Israel?
Well, it depends on who's going to answer that question. I think objectively, from what we know, this seems to be, as your guest, that you just showed the tape said, it's a limited response that shows a signal that we can do more. But of course, the Iranians are spinning it as, no, we shot these things down, and as I understand it, they're not even mentioning it. The president gave a speech today, didn't even mention the attack, went back to the attack last week, didn't mention this attack. The Israelis, of course, are saying, yeah, well, we showed them. Let's see. I think one of the things that we have to think about is, what does the White House think? Because, of course, the White House said, don't do anything. So is the White House going to say, all right, well, you did something, just not as much as you could have, so you kind of deferred to us? Or does the White House say, hey, we told you don't do anything, now you did this, now there's a risk? The RRGC are a bunch of bad guys. So whether they have decided to retaliate or say they're going to retaliate this morning or not, there's still a risk that there's going to be an escalation here, and that's what the White House obviously does not want to see.
You brought up the White House, so let's talk about that a little bit more. Let's explore it together. So the White House told Iran don't, Iran did. They told the Israelis take the win, they didn't. So how much influence does the White House actually have over what's happening in the Middle East?
More than I think your question suggests, but a lot less than we'd like it to be. So if you go to where the Israeli war cabinet wanted to be, they're, all in, right? There is no dovish wing of the Israeli public or the Israeli government anymore. There's hawkish and even more hawkish. So on that basis, I think that the Israelis have been, believe it or not, somewhat restrained in how they've responded not only overall to the Iran response, but to Rafah, to Gaza. I mean, it's hard to say it's anything other than egregious in many cases, but it has been somewhat more restrained than we thought might have been the case. Having said all of that, obviously the White House has been trying to tell Netanyahu and his government, don't do a lot of the things that they're doing anyway. So it's a balanced picture here. But I don't think it's right to say the White House has no influence. I think in particular in the Rafah thing. Remember, 6 weeks ago, the threat was, if there's no hostage release by Ramadan, we're going into Rafah. Now we're after Ramadan, and they still haven't gone into Rafah. That doesn't mean they won't, but it does mean that there's been some tempering of the worst-case scenarios.
Doug, you've done a lot of work on sanctions, not just when it comes to sanctions the United States puts on countries like Iran, but also Russia. Have any of these sanctions worked? Because the U.S. is mulling new ones, but they have a laundry list of others. It just doesn't seem like they're enforcing them.
Yeah, so your question has a lot of parts to it. First of all, let me start with the end of your question. Enforcement is the key, right? So what we do, what we say, and then whether we enforce it are often two different things. First of all, sanctions used to be very rare. Then over the past decade, they've become enormously commonplace. That's a problem for the markets because what are sanctions? Sanctions are basically the government stepping in and impairing commercial relationships for geopolitical or other strategic reasons, right? That's what they are. They are simply saying, you have a contract, we're going to tell you you can't enforce the contract. You want to buy something, you want to sell something, we're going to say no. Okay. But then the question is on oil, which is where a lot of the sanctions are focused, Venezuela, Iran, Russia. What we've seen is sanctions that are not only porous, they're almost blatantly ignored. And so the question then becomes, if you put on sanctions and if you ignore the compliance with those sanctions, then are you undermining the effectiveness of those sanctions? The one part of the sanctions regime that works, and it really works, is secondary sanctions. That's where we basically say no bank in the world can touch anything that has even a secondary relationship with something that we've sanctioned. So the banks, which have enormous compliance departments, say, okay, we're not going to touch this. We have not done that in most cases. Why? Because we're worried we're going to wrap up Chinese banks and other banks in a much more broad-based, geopolitically significant way. So we're saying, number one, we kind of like oil being on the market because it helps gasoline prices. Number two, we don't want to go there on the secondary sanctions level. So, yes, we're escalating sanctions. Yes, they're a serious threat. No, we don't enforce them very well at all.
Well, all these issues are basically a cloud that's overhanging the IMF meetings, especially what higher oil prices would mean to some of these central banks at the same time that they're dealing with a stronger dollar. How much are you seeing on the sidelines of this IMF? How much U.S. policy is impacting the rest of the world?
It's certainly a major topic of the official meetings. So it's hard to say that people aren't saying, wow, U.S. Fed policy, U.S. fiscal policy, the debt deficits. And, that has been a percolating message across the meetings. What's interesting to me is if you go back 6 months ago to Marrakesh, to the last time this group got together, many of the same issues were there. But the reaction to participants then was one of enormous, I don't want to call it panic, but it was enormous unsettling nervousness. Now the same issues are here, and everybody seems to be saying it's too uncertain for us to figure out how to price it, so we're going to ignore it. And that's really interesting to me. It's almost the difference between risk and uncertainty. Uncertainty is too big to price, so you can either take your money off the board and go home, or you can say, I'm just going to ignore it. And that's what seems to be what's going on.
That's where I wanted to go. How much is this faith in the election cycle, given the fact that ultimately some of the people, this administration in particular, doesn't want disruptions of a certain type, read higher oil prices, ahead of the election. And so therefore, they probably are going to pull out all the stops to either not enforce sanctions or unleash the Strategic Petroleum Reserve to prevent that from happening. So why not bet on that? Why not bet on the Federal Reserve doing the same kind of thing?
So the premise of the question is the uncertainty, right? This is not the stuff that you can model out. One of the problems that markets have is they don't do geopolitical risk very well, but they also don't understand politics very well. They think they do. They get obsessed by it, but they're really pretty bad at it. So, I mean, to answer a different question than the one you're asking is, everybody is saying to me, what's going to happen in the election? And everybody's telling me what their favorite pundit is saying. And I keep saying, you've got to be kidding me. It's April. Right? There are going to be 25 surprises between now and November. There are going to be 10 surprises in October alone. There are going to be 5 of those are going to be man-made. 5 of those are going to be natural disasters. Who the hell knows? So everybody is kind of looking at the U.S. election as the huge elephant in the room. And I've met with a number of government delegations this week. And I've said, how much is that impacting your thinking? And a lot of them say it's not, because we just don't know what to do about it. We found ourselves misplaced back in January coming out of Davos. Everybody was like, Trump's going to win, Trump's going to win. Now everybody's like, we don't know. I said, so what are you going to do about it? They say, we don't know.
Doug, it's great to catch up with you, sir. Appreciate it. It's fantastic to see you.
Always a pleasure.
Douglas Rediker there of the International Capital Strategies, weighing in on a whole host of issues. The lack of international cooperation seems to be a big issue down here in Washington, D.C. this week. The IMF spring meetings with the World Bank. Bramo, you're going to catch up with Geeta Gopinath a little bit later. What's the big topic?
Well, she wrote this paper, and I was actually reading through the whole thing last night, where she was talking about what fragmentation actually looks like. And what she found is it's not less trade. It's just going through intermediaries that actually create less efficiency. So I want to understand how much that's going to be inflationary going forward on a structural basis, in addition to some of the other issues that we've been talking about.
Looking forward to that conversation a little bit later on this morning. Coming up next on this program, Tobias Adrian of the IMF. That's coming up very shortly, live from Washington, D.C., with equity futures recovering on the S&P 500. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Five-day losing streak on the S&P 500 coming into Friday. Could become day 6. Equity futures negative here on the S&P by 0.4%, on the Nasdaq down by 0.7%. We're off by 0.75% on the Russell. The small caps not having a good time through the month of April. On the S&P, the longest daily losing streak going back to late October. Let's switch up the board and get to the bond market. Big moves again this week. Two-year yields making their way back towards 5% in yesterday's session, then pulling back 4 basis points. The two-year 494.71. You just get the feeling that the conversation, maybe not the conclusion, but the conversation is changing at the Federal Reserve based on some of the commentary, Lisa, we've had over the last few days.
And the John Williams note that you pointed out, really, to me, that speech highlighted just how much of a turnaround there's actually been. This was one of the big doves coming out and even acknowledging the possibility of a hike if the data were to come in hotter than expected really speaks to a complete shift in how they're thinking about this.
4 consecutive weeks that two-year yields have been pushing higher. So yields have been pushing higher again this week, trimming some of that gain just on today's session. If you switch on the board, and you probably want to know where crude is. Crude's a bit softer on the session and down on the week as well. For a second week, we're down by 0.6%, 86.56. WTI down to 82.29. The market is sort of embracing this idea that things are contained in the Middle East. But Lisa, I think you've done a fantastic job this week of making sure that this market alone doesn't shape your thoughts exclusively as to what is happening in the Middle East. Because as Norman Rule said on Monday, this is a new Middle East after the lines we crossed over the weekend and again overnight.
And you saw that with respect to the knee-jerk reaction going up to $90 on Brent very quickly in terms of what kind of reaction it is. And frankly, in every note that we get across Wall Street, people talking about the increasing possibility of $100 barrel of oil if there is some sort of greater escalation that could be highly punitive for other potential asset classes.
Greater escalation that hits global supply. So what we've seen in terms of missiles back and forth between Israel and Iran does not touch a barrel of oil. And that's why you're seeing all this risk taken out. Now, if it was to touch, say, vessels in the Strait of Hormuz, then we have a different price on Brent.
86.56 is the price on Brent right now. Under surveillance this morning, Israel launching a strike on Iran after vowing to respond to last week's unprecedented attack on the country. Explosions were heard in Iran's third largest city. The United Nations watchdog says nuclear facilities located there are safe. The details, I have to say, at 6:32 Eastern Time, here in America, still really vague and very foggy. At first it was missiles, then it was drones. We've got various reports coming out of Iran suggesting that this was unsuccessful and they won't be doing anything about it. What do we actually know, Anne-Marie, about what took place late last night?
Well, there's still a lot we're trying to digest. It also depends what media you listen to. So Israeli media is saying it was missiles. Iranian media is saying it is drones. And actually, it wasn't big enough to even warrant a national security meeting that they're having. They're trying to downplay this, potentially for 2 reasons. One, they want to show that they got the last big hit. And 2, if they really don't want to escalate, they have to show that their public domestic consumption, that this wasn't big enough to then warrant an escalation back to Israel.
To your point, John, we don't know what they hit. That was one of the big questions. What exactly were they targeting? It was a highly targeted strike on what? So, yeah, still a lot of questions out there.
Demonstrating capability, I think, is a conclusion that a lot of people made on Monday before we even had these strikes. And if you are targeting that specific city, isn't that what you're trying to demonstrate? That you can, if you need to.
Absolutely. Isfahan is where you will have nuclear facilities. It's where you will have drone manufacturing. It's where also one of the big cities that was key for Iran when they targeted Israel with those more than 300 missile and drones. So what Israel is saying at this moment is, we are not hitting you right now, but do it again and we will hit you.
That's the latest on strikes in Iran. We'll give you regular updates throughout this morning, of course, on Bloomberg Surveillance. Tech season, tech earnings season kicking off. We should check it on Netflix. Shares actually falling in pre-market trading. The streaming service giant posting its best start to the year since 2020. However, the company's guidance saying they expect subscriber gains to be lower this period, and investors will no longer get quarterly membership metrics. That's what's weighing on this stock, Bramo. We're down by about 6.8%. It's hard to point to subs growth as a reason for the stock to be up when the company itself is saying it's no longer going to provide it going forward.
Because they're going to get value in other ways, which means basically prices are going up. If you read this release, it's basically like, how many ways can they raise prices on your Netflix account? And, oh, yeah, if you are sharing anyone's account, then you potentially are going to have a problem
do that?
going forward. But I am thinking that maybe this also speaks to just how much risk aversion there is in the market right now, that not even that big of a miss gets punished this much in markets.
I can't decide whether to tell the audience who around this table is a password sharer or not.
You can't tell?
Is it a sharer? Is it a moocher?
It's a moocher.
I'm going to say this. I think Netflix has done a fantastic job cracking down on passwords, but maybe they need to do a little bit better.
Netflix is down by 6.66%. Let's get you the Fed wrap. Presidents Kashkari and Williams saying rate cuts may not come this year. Williams adding that a hike is still possible if warranted by the data. Bostic saying a cut is unlikely until the end of the year and that he has to be open to higher rates. Tobias Adrian of the IMF also warning the fight against inflation may be stalling, saying this: there is recent evidence that disinflation may have stalled in some countries. Higher than expected readings could challenge the last mile narrative and related investor optimism. I'm pleased to say that Tobias is with us now. Joining us from Washington, D.C. for more. Tobias, fantastic to catch up with you, sir. The last mile has proven to be difficult. Rates have repriced higher. It's driven a much stronger US dollar, and we're seeing complaints from all over the world, from Japan to South Korea, Malaysia, and elsewhere. Tobias, at these meetings this week, have those countries been given a green light to intervene if they need to?
Yeah, good morning. Very good to spend time with you today. So we have certainly seen quite a bit of movement in the dollar since the beginning of the year, in particular since the announcements of inflation data in the US that was above expectations. The moves we are seeing in currencies is fairly closely aligned with moves in currency differentials. So we're watching the situation closely.
Do you think if this is driven by larger deficits and industrial policy, that perhaps countries are maybe have a stronger argument to intervene than maybe they otherwise would do?
Well, when we are thinking about currencies, we look at two main inputs. The one are fundamentals. So exchange rate differentials are a key driver of exchange rates. The second thing we're looking at are market conditions. So to what extent are market conditions orderly or disorderly? To date, these movements have been fairly orderly, but we will certainly be monitoring the situation.
Tobias, some people have been talking about the idea of the election and what could happen if there are proposals for tariffs, as well as potentially increasing the deficit further, whether we could see something akin to what we saw in the United Kingdom under the former Liz Truss. Do you think that that's a risk?
Well, we have certainly seen fluctuations in longer-term bond yields in the U.S. and around the world. Some of that is certainly driven about expectations of fiscal policy going forward, but there are also other ingredients such as Federal Reserve policy and other central bank policy about quantitative tightening, i.e. the balance sheet going forward, and then the economic outlook. So part of the drive up in bond yields is reflective of the very strong economic performance, particularly in the U.S., that really has kept surprising to the upside in recent months.
One thing that we're trying to get a handle on, Tobias, and you're wonderful with this, is understanding where financial systemic risk is. And I guess that's the reason why we're focused on the dollar. When is it going to be strong enough to break something? That's what we're focusing on yields. When are they high enough to break something? Where do you think the biggest financial systemic risk lies?
Well, the good thing is that the major emerging markets have been very resilient. Really, over the past 5 years, we have seen massive shocks. The pandemic, inflation, geopolitical tensions, and the strong policy frameworks, the higher reserve levels, the strong regulation of banks has kept these major emerging markets very resilient, really for a long time. So when we are looking at financial stability issues, we continue to worry about financial sector weaknesses in some corners. In most countries, there's a weak tail in the banking sector, and in the baseline of a soft landing and of global inflation coming down, that weak tail is probably okay. But in an adverse scenario where inflation is higher than expected, more persistent, where interest rates are moving, and where credit risk may deteriorate more than what is currently priced in, we could certainly see some turbulence going forward.
Tobias, what is that weak tail? Are you talking about hedge funds that have dominant positions in treasuries? Are you talking about regional banks? What is it?
Banks around the world do have exposure to credit risk. For example, in the US, there are some institutions that have exposure to commercial real estate, and of course, quite a bit of commercial real estate is coming to refinancings this year and next year. So a combination of the macro outlook together with a tightening of financial conditions could put some banks, but also some non-banks, under pressure.
The IMF really pointed to loose fiscal policy in the United States as being an issue for the rest of the world. How much do you see the Inflation Reduction Act out of the U.S., that fiscal policy, adding to inflation that the rest of the world is dealing with?
Well, the good thing for the world is that the U.S. economy has been very strong, and that is, of course, a positive spillover to other countries. Demand is strong. Capital market activity is very strong. Capital markets have reopened for very countries that weren't able to issue in the past year or year and a half, and we have seen very strong issuance. So the dollar markets really remain very important for issuers around the world. You know, financial conditions have been tightening to some degree in recent days as volatility and uncertainty more broadly has increased. But you know, spreads remain fairly tight even for riskier issues. So overall, the picture remains fairly positive.
Interesting. Tobias, we appreciate that assessment this morning. Thank you, sir. I know you've got a very busy day ahead of you. Tobias Adrian there at the International Monetary Fund. What's happening in capital markets right now worldwide? We've heard plenty of complaints from places like Japan, South Korea and Malaysia. Malaysia has had to intervene in the FX market because of this rip-roaring dollar. Plenty of concerns about potential crowding out in capital markets given where yields are in America and the amount of capital that's currently attracting into US capital markets. But what you heard there, Bramo, was almost a positive assessment of the spillovers that come from better than expected US growth.
Basically, this is the reason why the IMF upgraded their forecast for growth globally, so that this is more of a positive than a negative. Okay, maybe you're not going to hear that from some of these central bankers that have to deal with it on the other side. But this, to me, raises this question. Are we looking at a world where it's going to be stronger dollar and there isn't necessarily the disruption to derail that? Also, remember all that discussion about de-dollarization?
Yeah.
Where do we go with that narrative?
His assessment of the FX market was interesting. So the way they look at things, have we seen excess volatility or disorderly moves? Then the way the rest of the world looks at things is, okay, is this based on fundamentals? Is this based on unsustainable policies? Is this based on policies that we just can't compete with? So if you believe this is based in part on an unsustainable fiscal deficit, in part on perhaps even industrial policy, and you're a country that maybe doesn't have the ability to do the same thing, certainly does not have the privilege that America has when it comes to raising debt and going forward with big industrial policy initiatives like the Inflation Reduction Act that you mentioned. Okay, then do you have a reason to intervene? Which is kind of what I was trying to get at there. How legitimate would intervention be in countries that do not have the options in front of them that America does?
I would argue you could draw an analogy between what you just described and, in a way, what China is doing with respect to putting their thumb on industrial policy and subsidizing it. On one level, you can say, okay, that's not a fair playing field. The U.S. has the privilege to borrow and then to fuel a recovery that allowed it to avoid the scarring of the pandemic that the rest of the world did. So then, do you have a legitimate reason to intervene? but can you? And I think that might be the more relevant
That's
question.
a much tougher question.
Yeah.
I think you're fighting against what? What did you say? It's like throwing money uphill and hoping it doesn't roll back down. That's a great phrase earlier this week.
Thanks.
I think it's true.
I appreciate it.
And it's exactly what they're trying to confront in foreign exchange at the moment. Let's give an update on stories elsewhere this morning. Let's get to the Bloomberg Brief. We can do that with Danny Berger. Hey, Danny.
Hey, John. High prices are still hitting UK shoppers. Retail sales in the country unexpectedly stalled in March. Shoppers scaled back spending on food and department stores. The volume of growth was unchanged in March. Economists had expected a 0.3% increase. Deutsche Bank is overhauling its staff for some Asia offices, trimming 10 private banking roles over the last week. As many as 60 were cut in Singapore and Hong Kong over the last year. Deutsche Bank wants to focus on more profitable markets and weed out underperformers, according to people familiar with the matter. Tesla shares lower pre-market this morning, down nearly 2%. They recalled almost 4,000 Cybertrucks. Tesla will be repairing accelerator pedals that can dislodge, become trapped, and cause the cars to unintentionally accelerate. Tesla says the fix will be free of charge. That's your Bloomberg Brief. John.
Yeah, that's the problem. Danny, thanks for that. Up next on the program, tech earnings season kicking off. Up next, a new approach from Netflix.
We're not going to be silent on members as well. We'll periodically update when we grow and we hit certain major milestones. We'll announce those. It's just not going to be part of our regular reporting.
That conversation up next, live from Washington. This is Bloomberg.
Timelessness and sustainability go together, right? You can't expect to be timeless if we're run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? How are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. This is Bloomberg.
Equity futures right now in New York, negative by 0.4% on the S&P 500. Just a little bit softer, but I can tell you last night, much weaker, negative by more than 1 full percentage point as we start to get reports of retaliation from Israel on Iran. And I have to say, the details of those reports still pretty vague. We'll try and get you more detail as the show grows older. Yields are lower by 7 basis points on a 10-year, 456.53, and in the commodity market, negative by 0.6% on WTI, 82.27. This week, we wrapped up earnings on Wall Street, and now the attention starts to turn to big tech on the West Coast. Under surveillance this morning, Netflix's new approach.
We're going to report and guide on revenue, on OI margin, net income, EPS, free cash flow. We're not going to be silent on members as well. We'll periodically update when we grow and we hit certain major milestones. We'll announce those. It's just not going to be part of our regular reporting. We're going to continue to report subscribers until Q1 of next year.
Here's the latest this morning. Netflix falling in the pre-market despite posting its best start in 4 years, adding over 9 million new customers, nearly doubling estimates. The company also announcing it will stop reporting paid quarterly memberships and revenue per subscriber in 2025. Joining us now is Bloomberg's Geetha Raghunathan for more. Now, Geetha, this stock in the pre-market has been getting slammed over the last few hours. And it's interesting because the numbers themselves pretty decent. So I think we have to start elsewhere. Removing certain disclosures. Geetha, do you sense that's what's spooking this stock this morning?
Yeah, absolutely, John. It has definitely rankled investors because remember, Netflix at its very core is a subscriber story. It always has been a subscriber story. I mean, this has been one of the easiest companies in the media space to model out. You have number of subscribers, you have their average revenue contribution per month, you just multiply those and you have your whole Netflix model. But that's not the way it is going to be anymore. There's just so much more nuance to the way that the model is working because the company now is a mature company, and that's really what they're saying. But obviously, it is going to be very hard for investors to map out the growth because you don't have that subscriber disclosure, and that's really adding to uncertainty.
But Geetha, can we just throw this in as well? The company itself has been terrible at guiding around subs for a long, long time. If you just look, even though we've been getting used to this company over the last 10 years, if you look at the way subs come in relative to the estimate, it's all over the place every single quarter. Geetha, is there something actually to take away from this that maybe this is the right thing? Just move on. No one can predict this stuff.
Yeah, I do think so. I think, you know, with Netflix, what you see is this tremendous volatility around earnings. To your point, John, it is hard for them to predict things. And you know, this is, I think, in a way, the right approach for them to take. You know, they have consistently said over the past couple of quarters that, you know, subscriber growth is no longer the main metric. Yes, it is important, but what they really want investors to focus on are the financials, right? Double-digit revenue growth, operating income, and look at the operating margins. We're getting to 25% this year, possibly 30% in the next couple of years. And that's really been the question all along, right, John? Can Netflix replicate the old media model where companies were earning about 30, 32% margins? And it looks like, yes, they can, and maybe they can even exceed that.
So just not on a selfish level, but maybe a little bit on a selfish level, Geetha, I was reading some of the commentary by the executives. And they were talking about monetizing certain corners as they provide more quality and value to their subscribers, which just is huge dollar signs in my mind of how much more I'm going to be paying for Netflix. Do we have a sense of what kind of price increases we can expect going down the line?
Oh, there is absolutely, Lisa, there are absolutely going to be price increases. There is no question about that. And I think the fact that they introduced this new advertising-based tier, it's a lower price tier at about $7 a month here in the U.S., that kind of gives them a lot of leeway, a lot of flexibility to raise prices without really having to worry about subscriber churn. So you look at the standard price or the price of a standard plan of Netflix, it's about $15.50. The price on that plan hasn't really gone up now for more than 2 years. So, you know, rest assured, they're absolutely going to raise prices on that. And, you know, they were asked this question on the call, you know, how much more runway do you think you have? Where is the ceiling? And they actually cited the pay TV bundle as the ceiling, which I thought was really interesting because, you know, the average price of a pay TV bundle is $70. Now, I don't think they're necessarily going to take it that far, but obviously they have a lot of pricing levers and they're going to exercise them definitely.
Is this the new model, Geetha? Because this is kind of what we heard from Disney, too, that they're going to charge more for some of their premium content, and they're not necessarily going to focus on growth. Is this the new streaming model at a time where we're reaching, I don't want to say saturation points, but maybe saturation points?
Yeah, I think we are definitely reaching saturation point. I think that's what part of, you know, the not disclosing subscribers also kind of tends to indicate that. But yes, it's going to be all about pricing because remember, the new mantra in the streaming model, in the media model is profitability, is operating income, is free cash flow, and Netflix is delivering. And the one way that they can do that is to keep raising prices at a regular cadence.
Geetha, can you tell us what the latest is in terms of Paramount? Do you see this Apollo deal with Sony potentially going through?
I'm not yet sure about the details, but I think it's definitely great news for investors. They were always very dubious about, the Skydance Paramount negotiations. That was not well received. Most of the non-voting shareholders felt that they would be diluted at the expense of, the Redstones kind of getting a better deal in that transaction. So the fact that, Apollo already actually came in with an offer for Paramount, a $26 billion offer, but there were always concerns, I think, both on the management side as well as maybe even some investors about whether they would be able to finance that. But now that you have Sony, which is a huge player, huge experience, a huge media conglomerate coming in, I think it's really good news for investors.
Paramount right now up by more than 10% of the pre-market. Geetha, wonderful summary as always. Geetha Raghunathan there of Bloomberg Intelligence. Let's get Netflix back up. Not a great start to tech earnings. If you do consider that stock a tech name, we're down by more than 6% in the pre-market as they start to pull back on certain disclosures with negative 6.44%. I think the only thing you care about are the numbers we get in early May, and that's Apple. Apple just around the corner. And Lisa, for me, Apple, the standout this earnings season. Let's not try and be cute about it. Given the year they've had so far, given the amount of different stories, touch points, tension that they touch, I think that's got to be the story of earnings season.
And it's rather inauspicious that the Taiwan Semiconductor Manufacturing Company came out with a warning about smartphone sales when they talked about chip demand there going down. How high is the bar right now? And I think that's also the question that we have to ask around Netflix. They performed really well when it came to adding subscribers this quarter. Just simply the elimination of that really sent the shares down. So how high is the bar for the likes of Apple and the rest?
What Geeta said is that if you do not have those disclosures, it's going to be even harder to try to map out what the growth model looks like and the profit margins look like for a company like Netflix. Apple, though, I'm so interested in two things. China. How bad is it, given some of the preliminary data we're seeing? They are really struggling in that market. And AI. They want to do an AI MacBook. What does that actually look like? Is it just basically trying to sell MacBooks, more of them, by attaching AI to it? Or is this really going to be a brand new product that you have to go out and get?
Can earnings support this equity market? Equities right now negative by 0.5%. Need to talk about the latest in the Middle East. We'll do that next. We'll catch up with Nadia Lovell of UBS, Terry Haynes of Pangea Policy, the brilliant Adam Posen of the Peterson Institute, and retired Brigadier General Mark Kimmett. That conversation just around the corner. Futures lower, treasuries a bid, and crude, everything's pretty contained at the moment. 82.35 on WTI. Live from Washington, this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
You look at the number of women that want to learn the game, young girls that are joining on the tee. Really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, into dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
they'd made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
We think that ultimately they are not going to be cutting in the middle of the year.
We've concluded that there are going to be no rate cuts this year whatsoever.
At some point, they might realize they need higher rates to kind of, tame the economic conditions.
I do think that it's a realization of investors that we are in a higher interest rate for longer.
But to make the assumption we know what Jerome Powell and the Fed is going to do 3 months from now, I don't think makes a lot of sense.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from Washington, D.C. this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance. Perhaps some of you up late last night looking for more detail on the strikes reportedly conducted by Israel on Iran. We've still got tons of questions and very few answers. The nature of those strikes, what was behind them? Was it drones? Was it missiles? What did they hit and how much damage was done?
It depends which press you're looking at. The Israeli press says these were missiles. The Iranian press says these were drones. The fact of the matter is there's still a lot of details we do not know, but it's obvious that at the moment, this was really a messaging tool. It hit a city that has facilities, nuclear facilities. It hit a facility where Iran has launched some of their strikes from, and it's a message of we can hurt you, even if we aren't right now. They want to establish some level of deterrence.
Let's bring up the crude board and take a look at WTI and Brent. We are trading a little bit lower throughout this morning, pulling back on crude, both Brent and the WTI contract. Brent crude down at 86.47, negative by 0.75%. Similar move on WTI, actually heading towards another weekly loss, Bramo. But I keep going back to something you said at the start of the week, Lisa. Contained, steady, sure, but not calm. Anything but.
And that's the reason why overnight we saw such a big jump. Doug Redeker, actually, I think summed it up perfectly, where he said, back at Marrakesh, where IMF had its last confab, they were talking about the concern around uncertainty, and people were feeling sort of negative around it. This time, it's like what Lori Calvasina said, staring into the sun. We can't price it. We don't know what to do with it, so we're going to ignore it. And that goes with pretty much everything. And in the crude market, I think that a real good question is how much risk premium is actually priced in, given the fact that so many people are talking about $100 a barrel. Should there be a true protracted escalation?
Well, Goldman Sachs already says it's about $5 to $10, maybe $15 max already priced in. So if you don't have that escalation, which we don't today, given what this strike basically is symbolizing, that this is a message and a signal, you're going to see the market start to pull back. And of course, we're waking up with not a single barrel of oil actually hit. Now, if there's something that happens in the Strait of Hormuz, potentially we wake up to a different story.
Elisa, you mentioned what Doug Redeker said. Let's lead on that just a little bit more. The degree of influence that this White House has over events building in the Middle East right now. And let's take two different stories. So they basically turn around and tell Iran don't, and Iran did last weekend. They tell the Israelis to take the win. The Israelis, based on reports overnight, did not. How much influence does this White House still have over what takes place in the Middle East?
What Doug Redeker was saying is more than it seems, because of what's going on with Rafah and other areas where you haven't seen a red line crossed that Joe Biden had put out there. I do think that there is a question, though, of where the limits of that are. I also wonder how much oil prices are influencing the White House's decision-making, considering the fact that prices cannot go up materially if they want to win the election. That at least is the feeling among a lot of political strategists.
The U.S. posture in the Gulf and the U.S. rhetoric that we have heard is constant defense. Similar, trying to take the temperature out of the room. It's similar what we're seeing overseas and similar what we're seeing actually when they're at the bully pulpit speaking about these issues. We've talked a lot with Norman Rule about this exact moment. Is the U.S. moving from a posture of deterrence in the region or defense. And whether it's not their actions or their words, it's a defense.
I'll tell you what I don't see, and I think we probably all share this opinion. I don't see any appetite whatsoever from this White House, led by this president, to do anything to disrupt global oil supply in any way, shape or form.
Zero. Because if they wanted to, they would have gone after, not come up with this price cap on Russia. They would have actually gone after Russian oil and gas, which is the money that is fueling Putin's ability to continue to fund this war in Ukraine. And if they wanted to go after Iranian barrels, they can. They did put pressure on China and the teapots in China that more than 80% of Iranian oil goes to, but they're not. The sanctions, I said it yesterday, the sanctions are there on paper. They're not enforced.
We're expecting to hear from Secretary Blinken a little bit later this hour, so look out for comments from him. Any headlines that are worthy of talking about, we'll bring them to you. Equity futures right now on the S&P 500. Let's check in on the market. A little bit softer, negative by 0.4%. Yields a little bit lower on the session over the last few weeks, though, a whole lot higher. We're down 5 basis points this Friday, 457.76. Let's talk about the Fed speak, Bramo. Okay, the conclusion hasn't changed. They're still looking to cut later this year, but let me tell you, this conversation has changed in a massive way in the last few weeks.
And let me tell you that John Williams was the one who really seemed to exemplify that the most to me, considering the fact that he is so dovish and even entertained the idea of hiking rates again, should the information really be there. Neil Kashkari, meanwhile, talking about how there's a real possibility they are not going to cut rates this year. It's going to be 2025 when they cut rates for the first time. It's a new tone. Albeit maybe not definitive.
I love the Bramo tone. Let me tell you, it's my favourite Bramo phrase.
No,
I know, it's my favourite phrase of yours.
It's a lot of fun.
Let me tell you something.
Yeah. Let me tell you, you missed Jonathan Pingle of UBS. Maybe
I did miss that.
Maybe Williams was listening to him. This probability.
What did he say?
Not the base case, but the probability that they are starting to look at that there could be a hike. And that's a pivot of a pivot, which is a U-turn.
A U-turn. Okay, we're doing that again. All right, good news. Coming up on the programme this hour, Nadia Lovell of UBS with the S&P 500 on a 5-day losing streak. Adam Posen of the Peterson Institute looking for a stronger US dollar, and retired General Mark Kimmett as Israel reportedly retaliates against Iran. We begin with our top story. Middle East tensions and a hawkish Fed driving stocks to 5 days of losses. Nadia Lovell of UBS writing this. We believe the economy will be able to handle delayed rate cuts and growth will remain above trend. During earnings season, we expect companies to beat estimates and look for profit growth to broaden out beyond the Mag 7. Nadia, I'm pleased to say, joins us now for more. Nadia, let's get into that. Pricing power. I know Lisa wants to talk about P&G in just a moment, so let's start that conversation. Where is their pricing power right now?
You know, we still think that there is a bit of pricing power in the market. We are starting to see that dissipate, though. We saw that, echoed in some of the survey, whether it's PageBook or doing ISM. We're seeing some of that start to come out of the market. But, our sort of view on consumer staples, we think that it's neutral and pricing power is starting to dissipate among some of those companies. And this is why we have a neutral rating on consumer staples, and we look more towards areas like tech and industrials, where we think that industrials will benefit from a pickup in manufacturing activity.
So, Nadia, I'm looking at Tide Pods and how much they cost. And honestly, you can spend $8 on 25 Tide Pods, at least in New York City. And this is one of the reasons why Procter & Gamble doesn't seem to have any problems exceeding estimates, exceeding the price targets that some equity analysts have on it, because they do have that pricing power and they pay a lot for it in terms of advertising, because Tide is the main detergent. How much do you see this as an anomaly versus the mainstream, given the fact that we got very different types of commentary out of the Beige Book?
I would say in terms of the pricing power, look, like companies are noting that they're having a more difficult time in passing through those price increases, and consumers are starting to push back on that. There's certain brands, of course, that are going to be able to, on the margin, to continue to do that. But even that is dwindling. At some point, the consumer will push back. And even with those, brands, you'll start to see some potential trade down to store brands or private labels. And so I think companies are aware of that. They are doing the best that they can to protect margins. But that's something that we're all closely watching. We do think that, for within consumer staples, those that are able to really drive volume growth and not so much rely on pricing are the ones that are going to stand out. And it tends to be those bigger, larger, stronger brands.
It is striking to me, John, the fact that we heard Netflix really rely on price increases, and Procter & Gamble is on track to boost its prices for a 6th consecutive year. That's really expensive Tide Pods.
We saw what happened with inflation, and yes, it is very expensive Tide Pods, and I'm paying the price for them. We saw what happened in the last regime, Nadia, when we had inflation and upside surprises repeatedly, and the Fed was chasing it. We saw immense top-line growth at US companies. Nadia, is there anything about this regime, this growth inflation policy mix, that might change that story, might threaten it?
I don't think so much. I mean, you're still seeing top line growth for S&P 500. We expect that to continue this quarter. I mean, we're looking for sort of low to mid single digit top line growth. And the margins are still expanding, because when you look through for the rest of the earnings season, we're looking for 7 to 9% EPS growth. And we think that that is going to continue for the rest of the year. The baton, we are starting to expect that to be passed through to the rest of the market outside of the Magnificent Seven. This earnings season is going to be important for the 493. You might recall the third quarter of last year was really when S&P aggregate earnings flipped back into the black, but all of that really was driven by Magnificent Seven that was growing at 50%. So this could be the first quarter where we finally see the 493 eke out some earnings growth for the first time since fourth quarter of 2022. We think that by the time you get to the end of the year, that you see some conversions in growth between the Mag 7 and the S&P 493. We think that for the full year, you will get to 10% or so EPS growth. So the top line should hold in there given the strong economy, above trend growth. We're still looking for above trend growth, over 2% growth for the full year. And the margins, companies are able to hold on the margins because of well-controlled expenses. We saw that from the banks this earnings season, that expenses were well controlled. So even if they can't no longer put through price increases across some other companies are looking to control expenses to be able to protect margins.
Nadia, lots of attention on what's developing in the Middle East at the moment, and lots of commentary on it. The latest from Peter Cheer over at Academy Securities saying this: Iran's attack last week was meant to be far more successful than it was. Downplaying this attack makes even more sense. Iran cannot afford to have another attack fail as miserably as the last one did, and likely needs time to analyze what went wrong and what could be done differently in the future. There is a sense from people who specialize in this stuff, Nadia, that things are contained, that the threat of escalation is maybe a little subdued going into the weekend. Where are you and the team now on the energy markets and energy equities specifically, as they are somewhat related to developments between Israel and Iran?
Yeah, I mean, we did recently lift our expectations for Brent $5 across the board, now looking for $91 for Brent for June and September. We all recognize that there is a little bit of geopolitical risk premium built into oil prices, but our change is really due to fundamental factors. We have a modestly positive view on oil. We're expecting Brent to trade between $85 and $95, but demand remains intact. We're seeing surprisingly strong demand from OECD countries, particularly the European peripheries. And as we look out, we think that, Russia is going to shift the attention from export cuts and really more towards production cut. We're expecting a higher compliance from OPEC plus production cuts. And, production in the U.S. Seems to be well controlled. We're not looking for any real growth there. As it relates to equities, energy equities, we are neutral on the sector, but within the sector, we do continue to have a preference for integrated oil and gas companies, just given their diverse business models and strong balance sheet. And we also like oil refiners because refining margins are elevated and product inventory globally does still continue to remain low. So those are the opportunities that we see within energy sector, despite the fact that we're neutral.
Nadia, the key words you said there is June. It's the summer months. What do you see for the year end? Is this just a temporary lift potentially in the energy markets?
So yes, of course, the upcoming summer season, the driving season, and the cooling season. Also, we do expect, even as the voluntary cuts from OPEC plus is dialed back, we think that is going to be gradual, and demand will remain strong, and so that should help oil prices stay in the high 80s into year end. We're not looking for $91 into year end. We're looking for $87.
Nadia, thank you. Always appreciate your input. Nadia Lovell there of UBS Global Wealth Management on the equity market, pricing power, and what's happening with commodities right now. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg brief with Danny Berger. Hey, Danny.
Hey, John. L'Oreal shares are up, surging this morning after the French cosmetics company reported better than expected earnings in first quarter sales. Strength in the European and North American markets helped offset a slowdown in shopping by Chinese travelers. Like-for-like sales at L'Oreal, which owns brands like Lancome, rose 9.4% in the first 3 months of the year, helped by strong demand for its mainstream consumer products. Fashion icon Giorgio Armani is hinting at some big changes for his business empire. The